All right, and we'll get moving here. So first of all, we'll talk a little bit about our membership. The Rocky Mountain NetSuite user group has 1,370 members currently. Membership is free. You can register at rmnsug.org. When you register, you get a notification of upcoming meetings and events. When we are back in person, we are planning some special events, which will be some great value add meetings. You also get access to our LinkedIn forum, and if you're a member, we also offer the CPE credits. Today we have 3 CPE credits. If you are not a member and you RSVP'd and you are interested in the CPE credits today, please register at rmnsug.org. As a member, you also get access to our LinkedIn user group forum. The purpose of that forum is to support fellow members with questions and answers. We will also, excuse me, follow up with questions and answers from the meetings. We also use that forum to post our announcements, such as when our presentations are available, different notes, and then also discounts to SuiteWorld. Unfortunately, NetSuite has decided not to offer our user group discounts to SuiteWorld this year. We just found that out recently. So normally, and I presume we'll be able to get back to that next year, but normally we have a discount to SuiteWorld, but not this year. You can also post job openings on the LinkedIn user group forum if you don't have any announcements today. So where to find us? You can find us at rmnsug.org. That's Rocky Mountain NetSuite User Group.org. You can also find us on YouTube. We post all of our meeting videos and recordings on YouTube, and you can just go ahead and search RMNSUG on YouTube, and it'll bring up our channel. You can also find us on LinkedIn. Our LinkedIn group number is 5099096. So that's our URL. Our website does have links to LinkedIn as well, so you can find the LinkedIn user group through there. And on our website, we also have a post of every single meeting. So all of the meeting presentations, the recordings, the slides, any notes that we have, they're all available on the posts section. So I'll just show you that real quick. Today, we have, we've added our meeting notes, or I'm sorry, our presentation slides here. So under advanced inventory, you would go to posts and then inventory and advanced inventory, and then our slides are here. So you can download those in advance of the meeting today if you'd like, and otherwise you can just scroll through the posts and see all of our past meetings as well. Okay. So now is the time for our member announcements. If you don't want to unmute yourself and talk, you can post it in the chat window and I will read that announcement. Let's see. So does anybody have any announcements? Could be job openings, anything from any of our members. And if you think of it later as we go, and we can talk about it in the open forum as well, we can have some announcements there if we don't get to it now. I'll just wait another minute, see if anybody wants to unmute themselves or post something in the chat window. Okay, before we move on, I'll just announce, so at Eide Bailey, we almost always have a position or are looking for positions for NetSuite consultants, also project managers of various types, and throughout our different technology consulting practices, we always have something going on. So you can check our website for the job openings there. And then let's see, Munawar, you're new to NetSuite looking for some help. Well, this is a great place for you to start getting some help. Okay. All right, let's go ahead and move on. So real quick, I'll introduce the board of directors. We work in the background to bring you these meetings. We've been remote ever since the pandemic started, and hopefully we'll be able to be in person again soon, and you'll get to meet us in person, and we'd love to meet everybody else in person as well. But I'll just introduce everybody real quick. I am Cory Anderson with Eide Bailey. I'm the president of the user group. And then we have our sponsorship and member chair, Margie Komninos of PlantScan Corporation. Then we have our communications chair, Mike Kackline from Vertifor. Then our speaker chair, Peggy Evleth from RSM US. And then we have our treasurer, Dana Larson of Dana Larson Consulting. So again, thank you to the board members for all of your support over the years and helping to keep this user group running. Couple of reminders. Evaluation survey will be sent today. Please take a few minutes to let us know how we're doing. We do read and act on feedback from the evaluations. And specifically, if you have any topics for meetings that we have not done before or that you are interested in, we keep an ongoing list of meeting topics that we can choose from. We do have a rotating cycle of topics, but every once in a while we have an open slot where we'll come up with some new content, and we go to that list to determine what we're going to present on. And then I'll just announce real quick from Mike Parker. Moss Adams is looking for a NetSuite lead consultant. Strong accounting background and ARM experience is preferred. Thanks for posting that, Michael. All right. Another reminder. So please use the same email to RSVP as the email that you received the meeting invite. So we try to maintain individual member records. It gives us an accurate count of how many members that we have as part of the user group. If you received an invite to this meeting with different email addresses, please email rsvp@rmnsug.org to have the extra email addresses inactivated. Provide the correct company name in which emails should be inactivated, because we do try to maintain, like I said, individual member records. At the end of the day, if you have multiple records, you'll get multiple invites, and it doesn't give us a very good idea of how many unique members that we have to the user group. So please just email rsvp@rmnsug.org. Thank you. Talk a little bit about our meeting sponsorship. Membership to the Recommend NetSuite user group is free. The cost of our meetings is supported by 2 levels of sponsorship: our Suite app and consulting sponsors. Suite app sponsors must be available through suiteapp.com or through the Suite app portal, the Suite app page in your NetSuite account. And consulting sponsors must offer NetSuite consulting services and have certified NetSuite consultants on staff. We do 2 different types of sponsorships intentionally to hopefully bring a variety of visibility to the user group of different Suite apps that are available, and then also different companies that can help you if you need help with your NetSuite environment. If you're a sponsor and you're interested in sponsoring, you can sign up for either sponsorship type at rmnsug.org/sponsorship, but please be aware that there are requirements for each of those. So you please read through those requirements at that page if you're going to sign up. Here's another announcement I'll announce real quick from Patty Gilbert. Nolan Business Solutions will be posting a job opening soon for a junior NetSuite consultant to assist with Nolan product support and NetSuite consulting. Thank you, Patty. And Michael and Patty, please, you can follow up on the LinkedIn user group forum to post those job openings. Our upcoming meetings. So November of this year is our roles, permissions, and centers meeting. We'll also have our 2021.2 updates. This is a new meeting topic for us, and I'm excited for this content. I think it'll be a great meeting. And then in January, this coming January, we come back around to our analytics meetings. So we usually do save searches and reports or Suite Analytics. And so we're going to come back around and do a Suite Analytics presentation in January. Suite Analytics is constantly changing and getting better, and I think that there's a lot of new functionality with Suite Analytics that was not there even the last time we did a meeting on Suite Analytics. So it'll be important to stay on top of that. And then in March of next year, we're going to do our potpourri type meeting. And so potpourri means we're going to have a variety of topics. They may not be specifically related, and we'll have different presenters. So we'll have a list of those topics as we get closer to that meeting date, but that'll basically just be a smattering of different things related to NetSuite. And then we'll also do our 2022.1 updates during that meeting. Okay, moving on. CPE credits. So we have 3 CPE credits for today's meeting available. Certificates will be issued within 15 days after training. If you have problems or you don't receive your CPE credit certificate, you can email info@rmnsug.org. And the CPE credits are sponsored by Eide Bailey. And just one thing to note is if you don't get the CPE credit email, the certificate, please check your spam folders. Pretty much every time we get an email that says somebody didn't receive it, it's because it was stuck in their spam folders. So just go ahead and check that before you email, and if not, then go ahead and email and we'll get you squared away. So this is required from Eide Bailey for our CPE compliance. I need to read this. So to receive CPE credit for attending today's session, you must sign in and out of the session using code words. The facilitator will provide the first code word at the start of the session and then provide you a checkout code word once the session is complete. You can log in with your computer, click the link that was provided to you in the email on Monday night, and fill out the information and enter the check-in and checkout keywords. I will also post that URL in the chat window for ease of access for everybody today. We have not given the first keyword yet. We do that at the beginning of the main presentation. So I will post the first keyword when I start the presentation after we hear from our Suite App sponsor, Nolan Business Solutions. I would like to thank our consulting sponsor today, Moss Adams. And I have some information to tell you about Moss Adams. Moss Adams is a leading professional services firm dedicated to personally assisting clients with growing, managing, and protecting their business. With more than 3,400 professionals across 25 locations in the West and beyond, we work with many of the world's most innovative companies and leaders. We partner with NetSuite to combine a world-class cloud-based business management suite with the real-world business and industry experience needed to maximize the investment return on a new software solution. We offer a full range of NetSuite-based services, including implementation, optimization, and support. Many of our NetSuite consulting professionals have served in leadership positions such as owner, CEO, CFO, COO, IT director, or controller. By leveraging their wide breadth of business experience and detailed knowledge of the NetSuite software, our team can tailor implementation solutions that are unique to each business. So Moss Adams, thank you again for being our consulting sponsor today. I'd also like to say thank you to our Suite App sponsor, Nolan Business Solutions. And at this point, I'm going to turn it over to Carol Darcy from Nolan Business Solutions, and she'll have a brief presentation on how Nolan can help your business.
Great. I just noticed that I'm not in presenter mode, so if we could switch that, because I can't.
I'll get that switched in just a second.
No worries. Put myself on camera too, in case anybody wants to say hi. Hi, everyone.
Okay, Carol, you should be
Perfect.
Good there.
Does that look like? Can you guys see my screen?
We can.
Perfect. All right, let me just put myself on Do Not Disturb here so we avoid the little pop-ups and stuff, right? Okay, well, great. Well, thanks for the opportunity. I'm glad to join the group this morning and just give you a little bit of insight on Nolan Business Solutions. Some of you might have heard of us. We've been sort of in the industry for a little bit, so been NetSuite solution provider since 2006, also developing suite apps. That's what I'm going to focus on today for my little 10 minutes. So let's get going on that. So introducing myself first, I'm Carol Darcy, Senior Manager and Solution Specialist here at Nolan. So I'll be your host for the next couple minutes, talking to you about advanced bank reconciliation and electronic payments. Nolan Business Solution as an organization, as I mentioned, we've been a NetSuite solution provider since 2006, and also developing native suite apps. So that's kind of the key word here. All of our application are designed to work inside of NetSuite. So they're available on the Suite app as a Suite app bundle, can be installed in your environment. So from an end user standpoint, it's very much a NetSuite experience. You don't have to log in and out of different systems. Everything is embedded inside that environment, making it very intuitive for NetSuite users to use. So on that note, what are some of the Suite apps that we support? Actually, interestingly enough, our story started with the fixed asset module that NetSuite later acquired in 2011. What they've done with it since, I can't really vouch for, but we certainly have had our say in the initial design of the module, which to me speaks volume to the quality of our development and the adherence to the development standards of NetSuite, for them to kind of look at our code and say, hey, you know what, this is pretty good stuff. Let's just acquire instead of starting from scratch. So the same amount of effort and quality has gone into developing our advanced bank reconciliation and vendor electronic payments. And we also have a complete NetSuite consulting services team that specializes in various industries, as we can see on our slide here. Today, though, I would like to talk to you about our suite apps very briefly, give you an idea of some considerations there. So if you find yourself with the native bank rec having some challenges, a variety of challenges with some of the basic functionality, and would like to look at something that's got a little bit more, got some interesting enhancement in various areas, you might want to take a look at our solution. Not only are we very effective at reconciling bank transactions, but we've had great success with credit card merchant gateways as well, such as Amazon and PayPal, and also can support very well corporate reconciliation of corporate credit cards. Why do we claim to be an advanced module would be the following points here. So we have some flexible data import options that includes automated bank data feed. When you're using the Nolan ABR, we've designed our own bank integration, which I'll get into in a second with a screenshot here and giving you a bit of a visual of how our integration works. But essentially, we come as a full package. So we have an automated bank data feed that we can support, a couple integration models there that, in our opinion, makes our integration a little bit more reliable than what some of you might be experiencing with the native bank data feed in NetSuite, and also provide enhanced quality of the data. In our experience working with the same aggregation service that NetSuite is currently working with, we've had some challenges as well, hence why we decided to kind of design our own integration model. So more on that in a moment. But the idea is to give you that flexibility of bringing in the data that you truly need to have an effective reconciliation process and really eliminate that need to manually reconcile transactions. Enhanced matching features. So in particular, where we obviously can do the basics, reconciling based on a one or combined multiple criteria that includes dates, description on the bank statement, document numbers, and amounts, obviously. So that's kind of the basic, and we certainly can cover that. But where we sort of elevate the game a little bit and can enhance the matching features and help automate that much more matching of transaction is in our ability to leverage the multiple criteria along with priority levels so that you can really create a nice complex hierarchy of matching rules. So when you're looking at your bank data, oftentimes the bank will treat a cash receipt as a cash receipt and it's one bank transaction type. But from a business standpoint, this might mean a variety of things for you. A cash receipt on the bank statement might be a customer deposit, might be a cash sale, might be a customer payment. And depending on that data source on the NetSuite side, there might be various criteria that needs to be considered. So leveraging, again, that priority level and multiple matching criteria, you can kind of really create this nice matching hierarchy that helps you. Really, the key here is that it helps you auto match a much higher percentage of your data. We also have a couple additional concepts that is not available with native NetSuite, such as amount tolerance, for instances where you want ABR to automatically handle a certain difference in amounts up to a tolerance level that you choose. So whether that's a dollar amount or a percentage. The advantage here is that it can handle what I like to call immaterial differences. So when you got those instances where you're like, oh gosh, I wish, this is 9 cents difference, who cares? Wish ABR would just handle that for me. We can do that with amount tolerances. With the amount percentage, we can automate the posting of a fixed percentage of fees. So when we think of credit card reconciliation, then you have the ability to automatically post that 2% that the credit card merchant gateway is taking from you. So that's the idea around that. We also are very strong with our grouping rules, being able to group not only on just document number, which is what's available in native NetSuite, but we have a variety of fields that can be leveraged for grouping purposes. So whether you're tracking some commonality in the memo field, along with a date, and you want to kind of combine that to be able to group individual transactions on the NetSuite side to match to a consolidated amount on the bank side. That's what we most often see the need. So the many to one or one to many type auto matching to, once again, eliminate the need to tick a bunch of boxes to, that one transaction on the bank side. The other thing that clients really enjoy with our tool is the auto post capabilities with journal templates. So the idea here, if anybody, came from a QuickBooks world, I often hear prospects talk about, that good old memorized transaction in QuickBooks. So that's kind of what we're trying to do here, providing you with the ability of defining recurring type transactions. So those transactions that keep recurring on your bank statement, whether that's a bank fee, sweep account, bank transfer, some of those pre-authorized customer payments. So all of those types of transactions that recur in your bank statement are easily memorized with, again, some flexibility into the criteria that you're looking for there, but then also the ability of defining where you want to post that. Not only can we post standard journal entries, but we can also support advanced intercompany journals. So if you've got cash movement between subsidiaries, we fully support that, including balancing out the due from accounts. And we also have full support for customer payments. So depending on, we can look at the customer detail, the customer data that's available on the bank statement, and have a variety of ways that we can search for the corresponding customer record or invoices in the system and automatically post that payment for you. Along with that, we also expanded the capability of not only creating a journal template for kind of a standard journal with some of the standard fields, but we can also support GL custom segments or any other custom fields that might require tracking in your organization as part of your journal entry process. So pretty sophisticated functionality there. A couple additional points. Very comfortable with large volumes of transaction. Our developers are included scripts that are specifically helping us handle that. This is critical for credit card merchant gateways. Some of the organization will support our full e-commerce business with hundreds and thousands of credit transactions a month. So that is something that we can very easily support as well. We also are really big on automating the process as much as possible from A to Z. So with our statement direct and automated data feed in particular, we can not only bring in the data, but we can run all the matching rule, run all the auto post feature, essentially making all of that happen first thing in the morning before everybody's even in the office. So by the time the staff comes in and they look at their reconcile window, a very high percentage of the work is already done. And then they can really kind of focus their time on, looking at variances and differences and dealing with those instead of doing the stuff that, should be handled by the system. We have a very unique way of doing the matching capabilities as well. So by assigning a unique individual match ID to every single match that we do, and also keeping track of that bank data in the system, we really have a nice way of being able to find from an audit trail standpoint, 6 months down the road, you know, this NetSuite transaction was matched exactly which bank data. So really the match ID and keeping all the reconciliation information or data in the system gives you much more enhanced safe searches and reporting capabilities of your bank reconciliation process if cash reconciliation is really a big deal in your organization. So that's a little bit about bank rec. I did mention that I was going to kind of show a little bit about our integration option here. So essentially what we've done is we've stepped outside of NetSuite because we found it was a little bit more effective. We have a platform, Nolan Cloud Services on the Microsoft Azure platform that becomes sort of our integration agent between your bank's server and Oracle NetSuite. Through a secured SFTP connection, we can connect to the server for the purpose of pulling a BAI previous day file typically, bring that into our Nolan Cloud Services environment, parse the data, make all the data available in that BAI file onto our cloud platform, and then through an authentication-based connection, always secured as well with an account number and token. Essentially, your Oracle's NetSuite environment talks to Nolan Cloud Services to bring in that bank data. So again, the value here of the way we've designed our product, two things, is makes it for a much more reliable connection. We don't depend on anybody else. If you have any connectivity issues, we work directly with your bank to address those. And the quality of the data is typically superior as well because we bring in all of the data that's available, and then you can make a decision, what do I need to use for an effective reconciliation process? Fully automated. Yes, I sometimes forget that. So, because sometimes people get scared and they're like, well, you're giving me a lot of information. I just want my data to come in. So yes, I mean, the data comes in from from our standpoint. We think that's important for people to understand the data flow and, you know, how your data just appears on the screen for a number of reasons, obviously security and all that. So this is our integration model. But from an end user standpoint, basically, like I said before, you show up in the morning, your data is there, matched and auto posted. Okay. All right, so I just have a couple more minutes, so I'll be a little quicker on the electronic payment piece here. So what's different here than native NetSuite? So we also are an application that supports payment of suppliers and employee expenses electronically from within NetSuite. Sometimes I get the question, you know, how do you differ from some of the payment processing solutions that are out there? So if you're fairly satisfied with your AP, your accounts payable process inside of NetSuite with workflows or whatever you might have there, and the only piece that you want to automate at the end is the payment process and the pushing of the information electronically to your bank, then our tool can come into play as well, just like the advanced electronic payment in NetSuite, and I'll explain in a minute where it's different. But the idea in comparison to external payment processing application is that you keep everything inside of NetSuite with our solution. That's what it allows you to do. So leaving that, you know, full control and audit trail of the payment process alongside your accounts payable process inside of NetSuite. So Nolan kind of comes in at the tail end of that. You have a number of open invoices that you want to pay. Open and approved invoices that you want to pay. So that's when the Nolan process would kick in, allowing you to select the invoices that you want to pay, generating the bank file based on the file format specification that are provided by your bank. We have this is where we shine. So this is where there's a couple differences from the native functionality here. We fully support domestic and international payment, definitely have an unmatched expertise around international payments. We've worked with organizations that had multiple banks, multiple international payment scenarios, building that into the NetSuite environment with some logical aspects so that the end user can more effectively work with the tool. And SEPA compliant XML. So really the beauty of our tool is the configurability. And I'm going to get rid of this. The configurability of our tool to be able to address all the cross-border international requirements. So that's really where we shine. The native NetSuite functionality is great at doing domestic payments within a country. We are really good at addressing the cross-border requirements between US account and Asian account, European accounts, and all of that.
Carol,
We also
I'm sorry to interrupt. We do need to move on now.
wrap it up.
Yep.
Yeah, for sure. Yeah. So just a couple additional enhanced features around that you're seeing on the screen. That was kind of my last slide anyway. So again, just thank you for the opportunity. If you want to hear a little bit more, you can reach out to us. Thank you.
Great. Thank you so much, Carol. We really appreciate your sponsorship of our user group. Okay. I am going to share the check-in keyword and we'll get started with our main presentation. Let me share my screen. Where is that? Oh, there we go. Okay, so there is our check-in keyword. It is fall, and I'll post the URL in the chat window just in case you don't have it. So go ahead and check the chat window. It's there now. I'm going to leave this slide up for just a minute. If you are interested in CPE credits, please check in now. Okay, just another moment. Okay, we're going to go ahead and move on. So make sure you check in for your CPE credits. The code word is fall. All right, so we'll go ahead and get into our main presentation. My name is Cory Anderson. I manage our NetSuite Managed Services team here at Eide. Managed Services is basically post-implementation support. We work with all kinds of different clients. We have a lot of exposure to clients with inventory and advanced inventory needs as well. And so hopefully you'll learn something about inventory today. We've done this similar presentation in the past, and it'll be similar content. We do have a couple of new pieces of information in this meeting for you, and then I think Margie has some new points as well that she's going to go over. So the beginning morning here is going to be me. I'm going to talk about basic, excuse me, standard inventory in NetSuite, and then Margie is going to talk about advanced inventory and some manufacturing type topics later on. I will go ahead and move on. So here's our agenda for this morning. The first part of the meeting will have different types of inventory records. We'll talk about standard versus average costing briefly. Then we'll talk about elements of an item record, warehouse locations, transferring inventory, importing and exporting inventory records and data via CSV import, inventory management, purchase order to payment process, and then drop shipping and special order inventory. If you have questions throughout the meeting, please post them in the chat window. I'll try to get to them as we go. We do have a lot of information to go through today, so if it's something that's going to be a little bit more long-winded answer, then I'll ask, maybe we'll move that to the open forum, or I'll take down a note and we can follow up on it later on. So here we go. So first of all, I want to mention the features that we're discussing today. They may or may not be available in your NetSuite account. The demo account that I'm going to be using to show you has almost every inventory related feature turned on. So you'll see some fields that are on the item records that you're not going to see on your item records, and see some menus along the top and different things like that. So my goal is to give you a better understanding of some key inventory related features that NetSuite has to offer. We will not be able to, unfortunately, go through every single inventory related thing. And I think as I was preparing for this meeting, I was thinking about the accounting aspect of inventory, and we don't really go into the accounting aspect of it very much, but I think it might be a good topic later on to kind of do a deep dive into inventory accounting and the ramifications of all of the different types of transactions and things like that. If you're interested in that type of meeting, I would love to hear it in our survey that we send out at the end of the meeting. If you're interested, please let us know if that might be something we should cover in the future. So further research will most likely be required on your part to fully understand all of the features and the many ramifications of using them. So the LinkedIn forum that we have is available to all members to ask detailed follow-up questions that may not be able to be addressed adequately here. And also Suite Answers has a ton of great information, including video training, and then just the general help section of NetSuite I find a lot of times is really great. So we'll go ahead and move on here. Some advanced inventory features I'm not going to talk about. Margie will cover some of these topics, but not all of them. Barcoding, and actually, let's see, Margie may not cover any of these. So barcoding and item labels, lot tracking, pick, pack, and ship processes, serialized inventory, multiple units of measure, demand-based inventory replenishment data. We won't really do any digging into these today, and I think maybe at some point we can have maybe an inventory 201 instead of a 101 and dig into some of these extra topics. Again, if you're interested in more in-depth inventory detail, that more than what we cover here today, please say so in the surveys that we send out. So here we go. We'll start talking about our different types of inventory. So today I'm mostly going to be talking about, sorry, I'm going to grab my little spotlight here. Today I'm going to mostly be talking about physical item types. And so when we're talking about inventory, we're talking physical inventory, something that you can hold in your hand, that you can buy, that you can sell, that you have to ship to somebody, that type of thing. So different types of physical item types. We have items or inventory item. They're sometimes referred to in NetSuite. We also have matrix items, which are standard items, but they are put together in a group, and I'll explain that in detail. We have kits and packages. We have item groups and assembly items. So I'll go through each of those and talk about the different types of inventory items there. The non-inventory item types that are available in NetSuite, I'll cover briefly, but we're not going to go into a lot of detail here. So we have non-inventory for sale. This is basically, and I'll just start by saying that what I say here is not the only way that you can use these. I've seen a lot of different creative uses for these different types of non-inventory item types. So non-inventory for sale is to sell items that you custom create for each order, for example. Non-inventory for purchase might be office supplies that you purchase but do not sell. And then non-inventory for resale might be dropship items that you do not store but you sell directly from the vendor. There are some other item types as well: service items, download items, gift certificates, other charge items. You can think like gift wrapping for that other charge items. And I'll just point out real quick that with these three different types, so this is kind of a recurring theme, and I'll show you this here in NetSuite here in a little bit. The non-inventory for sale, for purchase, and for resale, basically the main difference between these three inventory types is the type of account that is available on these items. So you'll have an expense account and I'm drawing a blank. But basically, when you sell an item, you're going to have a cost account, and you're going to have, or I'm sorry, you have an income account and an expense account. So for sale, if you have a non-inventory item for sale, for example, you need to define an income account and an asset account. If you have a non-inventory for purchase, all you have to do is define an expense account because there's no income coming from a purchase only. And then a non-inventory for resale, I'm sorry, I take that back. Non-inventory for sale only has the income account. Non-inventory for resale has an income and an asset account. I'll show you that on an item record when we get into NetSuite. But that's basically the main difference between those record types. So let's move on. So just a quick discussion about standard versus average costing. And the reason I'm bringing this up now is that this is an important consideration upfront, because once you start using one of these costing methods for inventory, you can't change the costing method on an item. You can create new items to have different costing methods, but it's important to really think upfront before you start using inventory, which costing methods are right for you. So just a brief overview of standard cost. So standard cost enables you to track standard costs for items and to track variances between those expected costs and actual costs. So some of the advantages of a standard cost is that you value your inventory at a predetermined cost. It helps you determine projected profit margins when you sell that inventory. You can track variances between actual and standard costs, and a lot of that is helpful for managerial planning. So you can use this information to help plan future production and sales. Standard cost does require setting up cost categories and cost versions, and it does require quite a bit of regular long-term maintenance, because you have to basically continue updating those cost versions with time. And my understanding is that standard cost is mostly used in manufacturing, sometimes in a wholesale distribution environment. But for like a retail environment, or it's typically not that common. So that's a standard cost. And so now we'll talk about average cost. So average cost is pretty much the most common way of tracking cost on items in NetSuite. Inventory costing is calculated as the total units available during a specific date range divided by the beginning inventory cost plus the cost of additions to inventory. So another way of saying that is that average cost is calculated by the transactions that happen for those items. So item receipts, item fulfillments, purchase orders, all of those transactions actually add to the average cost, and NetSuite does those calculations for you. So profit margins are determined by the actual costs of goods. You can measure your performance against the historical costs of your inventory. There's no upfront setup required. There's no regular maintenance required. So as I said, average cost is the most common method used for inventory costing, but there are some examples where standard cost is appropriate. And then, as I said, the costing method cannot be changed on an item record once that item has transactions associated with it. So make sure you understand these different costing methods upfront before you start using those in NetSuite, because it is a little bit of a long-term commitment on those costing methods. All right, so that's costing. Now we'll jump into items and talk about the different item types. So first of all, standard standalone items, individual items that are sold and tracked by themselves. The example here is a tent. So this is maybe in a retail environment. So an item is a tent. Very straightforward. It's all put together. Everything is there. You get a package. You have a tent in it, and that item record in NetSuite represents that one tent. Then we have matrix items. Matrix items are similar items in a variation set. So in a matrix, you always have a parent item. That parent item represents the group of items. So it's not a real item. Then you have the sub-items. The sub-items are the actual items. So in this example, we have some shirts that vary by size and color. So you might have small, medium, large, extra large, 2XL, and then you have blue, red, tan, and gray versions of that shirt. So matrix items are they're still individual standalone items. Each item has its own item record in NetSuite. It has its own unique SKU, its own unique UPC code, and all of those things, but they are part of a matrix set. And there are some advantages of using matrix sets in NetSuite. For example, if you use Suite Commerce or Suite Commerce Advanced and you have items in a matrix set, then you can have them be on the same page on your website, and available for sale, and there's a drop-down menu where you choose the size and or color to pick the item that you want. And the other advantage of matrix items is that you can, for roll-up reporting, you can report all of the sales from the parent level instead of the individual child level. Larry, who sells these shirts? I think, I'm not sure if they do anymore. There's a company called AvidMax. Actually, they are a member, and I think they're on the meeting today, but they sell those shirts, and I think I have one or two of them. They're great shirts. Anyway. Oh, and Brady says, yep, they still do. They have those available. All right, so we'll go ahead and move on. Oh, and by the way, I'm going to do a quick demo of using the Matrix Item Assistant a little bit later on here. All right, next item type is item groups. So this is an item group is a unit composed of items from your inventory. A group is sold as one unit, but has several member components. So in this example, we have the ultimate camping kit. So in this item group, we have a tent, a sleeping bag, a mattress, and a stove. So as you sell this item group, then you are selling all of those component items with that group. So what you would do is you would have a sales order in NetSuite, you would add the SKU for the item group, and NetSuite will automatically know that all of those component items are part of what's being sold. So in this example, the total price of this item group is $650. I'll tell you why that's important here in a moment. Another example of a group is called a kit package. And it's essentially the same concept. A kit package is a unit composed of items from your inventory. It's sold as one unit and it has several member components. So here is the exact same thing in a kit package. It's a tent, a sleeping bag, a mattress, and a stove. But here, the total is $599.95. And so that's really the key difference between kits and packages and item groups. In a kit package, you can define the price and it's independent of all of the components. In an item group, the price is made up of the price of all of the components of the group. So you don't have as much control over the item group pricing as you do a kit or package pricing. Let's see. Okay. Can everybody still hear me? I'm getting a couple messages. There might be an audio issue.
Yeah, I can hear you fine.
Okay.
I can still hear you.
Thank you so much.
I can hear you.
Okay, thank you.
You do have a question though from someone about from Stephen.
Oh, okay, Stephen. Do you have to set up an assembly for each combination for inventory consumption? Set up an assembly.
Yeah, so I was looking from the bill of material aspect. When you're pushing these through the system, let's say you sell a kit, do you have to set up a bill of material for each combination of the kit?
Well, so I think bill of material refers more to a manufacturing process where you're kind of building the items, and a kit package is not necessarily related to a manufacturing process. If you do so, but to answer your question, if you have different combinations of kits and packages, like for example, if you had in this example you had 2 or 3 different tent options within here, you would need a unique kit package for each option that has a different tent. Does that make sense?
Yes, it does.
Okay.
And I think that answers my question. Thank you.
Okay, perfect. Thank you. All right. All right. So we'll move on. So that's kits and packages and item groups. And then we have assembly items. So as I mentioned just a minute ago, the assembly items are more related to a manufacturing process where you build or create the product that you're going to sell. So an assembly item is an inventory item made of several components, but identified as a single item. Assemblies are manufactured by combining raw materials that you stock. And raw materials that's a term that can be used kind of loosely. You know, it's not like you don't necessarily have to have the fabric and the thread and the zippers. You know, there are other ways of maybe you purchase a component that is part of a larger component. And Margie will have some good examples of how this works a little bit later on as well. But basically, an assembly item, you have to build in NetSuite to make it available. So you would need to have a SKU for the fabric, the thread, the zippers and mesh, all of the different items that go into it. You have a separate SKU that's a raw material SKU in NetSuite. Then you have an assembly item that defines how much of that, of each of one of those is going to be used. And then you would build the assembly item. Once you build the assembly item, then it becomes available as a single unit to be sold. And so at that point, after they're built, assembly items act just like regular inventory items. You can also have assembly items as part of different a kit or a package or a unit group. So you can kind of put it all together in different ways. So here's some differences, basically, to go through each of these. So the members of an assembly, we can have inventory items, non-inventory items, assemblies, service items, and other charges. So in an assembly, maybe there's a cost of the manufacturing. You can have a service item or another charge that represents that cost of building that product. And so those are the different members that you can have in an assembly item. In a kit or package, the member items can include inventory items, non-inventory items, assemblies, kits, and service items as well. Let's see. I don't think you can see my pointer. Huh. I just realized that.
Yes, we can.
Yes, we can.
Oh, you could before? Okay.
Yeah, it was before. It was better before, actually, the blue dot.
The bigger one? Okay. All right. I'll keep on this one then. Great. I was just looking at my preview screen and I couldn't see it, so thank you. All right. So item groups. The members of an item group can include inventory items, assemblies, kits, and service items. So this is a little bit of a reference that you can come back to later on if you're thinking about how you can use these different types of inventory items to achieve different purposes in NetSuite. These slides are available now on the website, as I showed you, and then they'll also be available later on as well. Pricing, assembly. Item price is independent of its member prices. So it's like a kit or package. You can choose whatever price you want to sell that for. And then an item group is dependent on its member prices. So the price is going to be basically the sum of all of its components. GL accounts. On an assembly item, you're able to identify a cost of goods sold account, income, and asset account separate from its components account. In a kit package, you're able to identify a separate income account. And then in an item group, there is no account designation available. So the GL accounts will be related to the components of the item group in that case. And then last one is inventory impact. Inventory impact for assembly items is you're building an assembly. So it decreases the asset account of the member items and it increases the asset account of the assembly item. In a kit package, if you fulfill a kit, it decreases the asset account of member items. And then in an item group, it also decreases the asset account of the member items. Okay, so that is the primary inventory item types. And I'm gonna real quick, we're gonna go into NetSuite for a quick demo so that we're not looking at a slideshow all day long. So I'm gonna come over here and make sure, yep, okay. So that's our CPE check-in screen. I think I need to get rid of my normal, okay. I'm gonna close that out. That's the check-in window. And let's see, I'm just going to pull this over here real quick. Change accounts. Okay, so as I mentioned earlier, this is a demo account and it has like every single inventory related feature enabled. So there's going to be a lot of stuff here that you're probably not going to see in your account. So what I'm going to do real quick is demonstrate how to build a matrix item set, and it's really simple. And there's a really great matrix item assistant, and I highly recommend using this. You can create items or matrix items through a CSV import process, but it's really tricky. And you really got to get your CSV file set up correctly. It might make sense if you have a very large number of inventory items that you need to create at one time. But if it's relatively small, I recommend using this method. So I'm going to go to Lists, Accounting, Items, and then New. And real quick, you can see these are all of the different item types that are available in NetSuite. We talked about a lot of those, but you can see the for purchase, for resale, for sale, that repeats. So for non-inventory or other charge and service, those are always going to be options. So right now, I'm just going to do a quick inventory item. I'll do a matrix item assistant.
Can everyone see that? It was cut off on my screen, that list you were just showing.
Wow. Yeah, it might just be the zoom level you have set. Looks like I'm seeing the preview. I can see the whole screen there too. Okay, so right now I'm just going to I'm going to create a shirt set. So I'm going to call this RM for Rocky Mountain shirt, and that'll be the primary item name number. I'm not going to do anything else right now, but you could put in your display name code, your vendor name code. I'll go through what all of those do later on, and we'll just hit next. Oh, I have to choose a schedule, which is for taxes. Okay, so what we can do is if you already have a list of item properties such as size or color, you can choose from that list here automatically. In this case, I do have a size list. I'm going to use a color. I'm going to create a new list. So the list name will be called color, and the display name will be called color. Property value will say red, green, blue. So we'll have 3 different options, and then I could, if I needed to add another variety, so like if I wanted to also do size, I could save and create another here, but I can also just use one individual property. So I'll hit next. So just for quick demonstration purposes, we're just going to do the one property today. Is this thinking? Yes, it's waiting. Oh my gosh. Okay. So what we need to do is we need to create the item name template. So we'll start with the matrix option. So that's going to be the custom list that I just created, and we're going to say RM shirt dash, and then it'll be either red, green, or blue. And I just realized I didn't. Oh, it already set the. Basically, for red, it'll have R, G for green, and B for blue. Please select at least one element in each field. Oh, and the item attribute we'll call item name number. So the item ID, we'll do it like this. So this will be the item name and then the attribute, dash the attribute. I need to select those 3 and then go on. It's waiting. So you can see now NetSuite is saying, okay, I'm going to create 3 different matrix items. I'm going to have RM shirt R, RM shirt G, RM shirt B. So those are all going to be part of this matrix set, and it does it automatically for me. I'm going to hit finish, and then each of those are now item records ready to be used. All right, so from here, I'm going to switch back to my presentation, and we'll move on. All right, so we'll talk about key elements of an item record. So key elements of an item record, we have internal ID. This is for use in NetSuite only. It is a unique number that is assigned to each individual item, and you can use the internal ID for CSV imports and exports and things like that. The external ID, this is optional. If you have external systems that use a unique ID for each SKU, I highly recommend, if you have external systems like a website, or if you sell products through another vendor, through a retailer or something like that, use external IDs. External ID is kind of weird. It cannot be displayed on an item record, but you can create a custom field that sources it from the external ID field, and then show it on an item record form. You can use a workflow to do that. Where internal ID, and I'll show you in a minute, internal ID you can actually expose on the item record field, so you can show the internal ID on the item, or I'm sorry, on the form itself. One example of an external ID is something like this, 985-96305. In this example, the 985 represents the manufacturer number, and then the 96305 might represent something like the last 5 digits of the UPC code. And external IDs have to be unique as well. You cannot have duplicate external IDs. An item name or number, this is up to 60 characters long. This will appear in lists on transactions. So the item name number is a brief title for the item. So like we just created that those shirts. So the item name number for those could be like Rocky Mountain shirt green. I do see in a lot of examples where this number right here is actually the item name number, and it matches the external ID. That's actually a great practice, especially if you have external systems. Most of the time it's going to be an ID such as this. The display name code, if this is populated, it will appear on the item column on transactions. So you could use the display name code as a basic item title instead of the item name number. So Rocky Mountain shirt green if you wanted to. And then UPC code, this is on the item record. That's if you have UPC codes that are unique to your items, you can assign this. NetSuite does enforce uniqueness on UPC codes as well. And so UPC codes are standard 12-digit codes in the US. You can also use EAN codes, which are typically European-based UPC type codes, and those are 13 digits long. Some other key elements of an item record are the vendors that you might purchase that item from, and there's a vendors tab. I'll show you here in just a moment. There's a vendor code. There's a purchase price. The purchase price, just a side note, it only shows 2 decimals, but it really saves more digits in the back end. You can define a quantity pricing schedule on the vendor section. Pricing schedules allow you to assign a specific discount based on the quantity purchased. And pricing schedules can also be used to define quantity discounts that you get when purchasing from a certain vendor. On an item record, you can have multiple vendors per item. So if you purchase the same item from different companies, you can define the vendor code, and the price that you get from each of those vendors on the vendor record. And I'll show you that here in just a moment. And then preferred, there's a checkbox on each of the vendor lines that says that this is the preferred, this is the vendor that the item will come up to be purchased from automatically. So if you use the order items function in NetSuite and you choose a vendor, the list of items that'll come up for that vendor are the items that have that vendor marked as preferred on the item record. So real quick, I'm also going to go talk about the item pricing, and then I'll show you these different areas on an item record in NetSuite. So item pricing, you can set up price levels for each item. Price levels can be assigned different discount or markup amounts. You can assign a price group to individual customers. And to do that, you would set up, first you would set up the price level. So you have to set up the price level on the item separately with a markup or discount amount. Then you can set up the price group with the same name as the price level. You assign that price group to the item record, and then you assign that price group to specific customers. So let's say you have a premium customers that get a premium discount on all of your products. You can set up a price group that says, okay, these customers all get 15% off all the time. Then you could have maybe a 10% discount group and a 5% discount, and then maybe a no discount group. So that would be the purpose of using the pricing groups. If you didn't want to use pricing groups, customers can also just be assigned a price level. So real quick, I'm going to switch over and just briefly show you what those fields look like in NetSuite. So I'll go to my USB cables field here, or item record. So on this item record, you can see that the internal ID is populated, or I'm sorry, exposed to the form. That's not always there. It's not there by default. And just a side note, this internal ID you can always get by looking at the URL at the top of your browser window. And that number right there, 1541, it says ID equals. That is the internal ID of the item that you're on right now. You can also expose it on the form like this. And then, as I said, the external IDs, if you assign those, you would need to create a custom field and then source the external ID into that custom field for it to be able to show on this form. So here's the item name number. In this case, it's USB cables 8 foot, and the display name code is just a duplicate of that. In some cases, the item name number might make sense to be like I showed, the manufacturer code dash the last 5 digits of the UPC code, for example. Here's the UPC code field, nothing populated on this one right now. And then we're not going to go through all of these different fields. These are some of the advanced topics that were that I mentioned earlier that we're not going to be able to cover. So some of the other things that I want to talk about, we have down here all the way at the bottom, we have our vendors sub tab. And here you can define all the vendors that you can purchase that item from. So here we have Cable Plus distributors. If that vendor has a unique code for this item, you can define that code here. And if you populate that code, that's what will show up on purchase orders when you order that item from the vendor. You can also set, here's where you would set the pricing schedule. So if you get a discount on certain quantities, you would define the pricing schedule separately and then apply that to this vendor line here. And then you can see here that this one is set as preferred. And then purchase prices, I'm not sure why it's plural. Typically there's just a single item or a single price right there. Maybe if there's actually multiple vendor records. That's weird, I've never seen that say plural before. But anyway, this is where you would define, if there's not a pricing schedule, this is where you would define the price that you purchased that item from the vendor. We also talked about the pricing fields. Under the sales and pricing sub-tab, here's our quantity pricing schedule where you would define that. And then if you define a pricing group, this is where you would define that. And let's see, we can see that this item is set as average cost for our cost estimate type. And we can also see, let's see, under accounting, I don't think it shows that. The costing method here. So costing method is average. The sales pricing, this cost estimate type, this is for when it shows estimated costs and estimated profitability when you're entering sales orders. So you can actually choose a few different options when you change that estimated cost type, but that doesn't change the costing of the item. That's defined here under the costing method there. Okay, so a couple of other just quick points. The average cost, this is an auto-calculated field. The purchase price, this is, you can define this purchase price. If you don't have a purchase price defined on the vendor section, then when you enter a purchase order for this item, this purchase price will be pulled in automatically. And then this is this field is populated automatically. This is the last purchase price. So the last time you entered a purchase order for this item, that pulled in the last purchase price from there. Okay, so I think we're going to move back to the slides and then move on. That was our item pricing. All right, so now we'll get into our inventory locations. Inventory locations. So we'll talk about some elements of a location. Elements of a location, think about if you have multiple warehouses or if you have multiple retail stores, each of those can be defined as a location in NetSuite, and each of those locations are going to have these values available. So you'll have a quantity on hand at each location, you'll have a total value of that item, you'll have average cost, last purchase price, and then reorder point, preferred stock level, lead time. These four right here are going to be part of the inventory management features that we'll talk about in a little bit, but those are typically set at the location level. Then we also have safety stock levels, quantity on order, quantity committed, and quantity available. So to show you that, oops, I'm going to go back real quick. I'm just going to go back in and change my account here. Sorry, Rocky Mountain. Gil One World. And I'm going to show you an item location, or I'm sorry, an item record, and then just how each of the locations will show. So if we go all the way down to the bottom here, the locations is underneath the purchasing and inventory subtab. And then we have all of the individual locations listed here. So all of these locations have the possibility of having this item in that location in NetSuite. And in this case, they're different warehouses. So here we have the US West DC. It's the only one that has the item on hand right now. So it's showing 62 on hand. The base unit is 62, and that's going to be defined up here in the primary units and that information there. The value is auto-calculated, and it's going to basically be the average cost times the quantity on hand. So that's the value of that inventory in that location. And then this shows you the last purchase price of that item. So the last purchase price is kind of cool because then you can also click on that, open it in a new link, and you can see the record that is driving that last purchase price. And then that last purchase price is also what's going to be showing up here under the last purchase price field. Did that open? It's still opening. This should be an item receipt. So an item receipt is what defines the last purchase price, not the purchase order, because a purchase order is a non-GL impacting transaction. The item receipt is the GL impacting transaction. So the item receipt is what drives the last purchase price. And you can see for that Old Faithful sweater that we're looking at, this was the rate, and that's where this value comes from, is that item receipt. So you can also see here we have reorder point, preferred stock level, purchase lead time, safety stock. There's some other fields here that we're not going to necessarily cover, but if you're using standard cost, this is where your standard cost information would be displayed. But we can also see, this is kind of cool, you have your quantity on order. So if you have any purchase orders that are outstanding, it'll show you the total quantity that's on order there. If you have sales orders where this item is not fulfilled, but it is committed to that sales order, it'll show you how many items are committed across your entire system. This shows you quantity available. So it takes the quantity, the total quantity on hand, the 62, minus 13, and this is your total available because these 13 are committed, so they're not available anymore. Then we also have quantity back ordered, quantity in transit. Those source from transactions, sales orders where it's not committed, or if you have a transfer order or an inventory transfer, it'll show you that total in transit there. So let me see. There's a question. Can we have multiple MPN for an item if we have multiple vendors? So MPN, manufacturer part number, that's a little bit tricky. Typically you can't have, in a traditional sense, a different MPN for different vendors, but you could define that vendor code field that I mentioned earlier. That would be basically your next best option for that. So under vendors, the vendor code is essentially that vendor's part number. But MPN is typically like a singular, unique code in general. So not really a way to define that per vendor other than this vendor code field. Okay, let me see any other questions. Okay, sounds good. We will move on from there. So that's our inventory locations, and you can see all of those fields under the location subtab. Back to my presentation over here. Okay, so we'll move on. So let's talk about how to add inventory. So we can see where the locations are, and we need to add inventory to those locations. So there's basically three methods of how we can do that. First of all, we have an item receipt. An item receipt must be received from a purchase order or a transfer order. The item receipt adds the received inventory to the location specified on the item receipt. So that's the most standard way of getting inventory into NetSuite on a day in and day out basis. You enter a purchase order, you receive the items, you create an item receipt, that item receipt adds that inventory to that location. Another way to add inventory into a location in NetSuite is an inventory adjustment. So an inventory adjustment is not reliant on purchase orders. It should only be used really for adjustments that are corrective. For example, missing inventory or inventory once missing but then found. It's not really a transaction that should be used to add inventory to your system as you're purchasing it. You should be using purchase orders and item receipts if you're purchasing inventory and then bringing it into your location or warehouses. An inventory adjustment does not balance out the GL, and what I mean by that is that you can adjust inventory in without showing that it has been paid for. So if you create an item receipt for an item, just one item, and that item costs you $50, it's going to add that $50 to the asset account, but you're not ever going to see that you've paid for that item later on in the system. Whereas with the purchase order, you also have a vendor bill associated with the purchase order and the item receipt, and that vendor bill represents you paying for that item. So item receipts, or I'm sorry, inventory adjustments, again, they're not designed for everyday getting inventory in and out of NetSuite. They're really just for corrective purposes. And then just a side note, inventory adjustments do preserve LIFO, last in, first out, and FIFO, first in, first out costing. The third method of getting inventory into NetSuite is called an adjust inventory worksheet. I have a red flag on this slide for a reason. This red flag means that this is a transaction that you need to be very careful with. The adjust inventory worksheet form is used to enter changes to the quantity or value of inventory items other than lot numbered items and serial numbered items or inactive items. It adjusts the inventory quantities exclusive of previous stock totals. So costing history is averaged, LIFO and FIFO is not preserved. And it updates the average cost, thereby resetting the historical average cost information. So an adjust inventory worksheet, I'll give you an example. Actually, do I have? Yeah, I do have an example. Let's just keep going on that. So here's the differences between adjust inventory and adjust inventory, or that should say inventory adjustment versus adjust inventory worksheet. So the inventory adjustment form is inclusive of the previous stock total. So if you add 10 items through an inventory adjustment and you had 5 items before, it will now say you have 15 items. The adjust inventory worksheet is exclusive of previous stock total. So it resets the inventory count to 10 on the date of the worksheet, regardless of the previous count. So if you had showing 5 in the system before and you use an adjust inventory worksheet to add 10, your total is 10. It basically completely overwrites and ignores the 5 that you had listed before. So adjust inventory worksheets, there are some specific uses for them. If your average cost gets thrown off over time due to incorrect item receipt costs or incorrect prices on purchase orders, you can use an adjust inventory worksheet to correct those average costs over time. Other than that, if you're adding inventory into NetSuite for the very first time, you can use an adjust inventory worksheet to add that, but it's really not going to be used for day-to-day use. Okay, so let's move on. We'll talk about bins. So bin management identifies places in your warehouse where you store inventory items. Bins help you track on-hand quantities within a warehouse. Tracking items by bins can be helpful to organize receiving items and simplify your pick, pack, and ship process when you're fulfilling orders. So in bins, and bins are a basic component. If you have inventory in NetSuite, you should be able to turn on bins. There's also an advanced bin management functionality, and then there's also NetSuite's WMS, which is going to give you more advanced functionality. I'm just talking right now about the basic bin management in NetSuite. So each item can be put in one bin, or one bin can have multiple items in it. Each location on an item record can have a preferred bin, and then bin numbers can be alphanumeric or alphanumeric. So I'll explain that here. So one example is alphanumeric. In this example, the bin number is AFE-05. So here, A would represent the main section of your warehouse. So let's say you have a warehouse with 20 different rows. This A or I'm sorry, maybe you have a warehouse with 60 different rows, and you have A represents 20 rows, B would represent another set of 20, and then C might represent another 10 rows or something. So F would be the set of shelves, for example, and I have a graphic here I'll show you here to hopefully help this make sense. E would be the set of shelves within that row, and then 05 would be the shelf number. And then in this example, there would be multiple boxes on each shelf with the item number on it. So here's an example that I just showed. So this would be this whole section. There's 20 rows. This would all be section A. And then F would be this set of rows. Let me grab my spotlight. So this whole set of rows here would be represented by F. And then in this case, E would be this set of shelves. And then 05 would be the 5th shelf down, for example. And in this example, there are 10, 12 different boxes that each represent one item. So each of those items are in that bin. So one shelf represents one bin. So that's an example of multiple items in one bin. Here is an example of a single item per bin. So in this case, you can see like BBA 0102, that's the bin number. And then in this bin, you could have just a single item. Now, if they're small items, you could certainly put more than one item in that. But if they're super small bins like this, it might only make sense to have one small item per bin. So that's just a couple of examples of how you can use bins. There's no right or wrong way of how to set these up in a warehouse. That's just to give you some ideas of how you could do it. The next image I have here is just an example. There's a lot of different radio frequency scanner, RF scanner solutions out there that can help you with your inventory warehouse management. They can help you figure out where to put things away in your warehouse. They can help you define the bin that you're going to put it into. They can help you pick orders and fulfill orders. And this is just an example of an RF scanner where you can see it has a bin number. You can see an item number on it. And then there's different functionality. So a couple of different companies that do this. I'm not going to point any out right now, but I highly recommend, if you have a lot of different items in a warehouse situation, you should be using an RF scanner solution of some sort. Basically, these RF scanners have software that tie into NetSuite, so that when you pick an item, it'll create an item fulfillment directly in NetSuite for you, and then it also tells NetSuite which bin you pulled that item out of. So they do a lot more than that, but they've come quite a long ways over time, and there's a lot of really great functionality you can get out of RF scanners. Couple of other points about bins. There's a a transaction called a bin put away worksheet. So if items get received without a bin being assigned to them automatically, then using the bin put away worksheet lets you put away multiple items to their preferred bin automatically. Bin put away worksheet, it can be used. You can print out a list of the items you want to put away and then where you want to put them away. And then when using bins, most inventory-based transactions will require a bin. So items must be in a bin for those transactions to work. One example is item fulfillments. So if your inventory is in the system but it's not assigned to a bin and you want to create an item fulfillment, it may not show that that's available to be picked in that example. The bin put away worksheets are typically used for in a manual capacity. If you use an RF scanner system, you typically won't use bin put away worksheets for your day-to-day inventory operations. Okay, so I am probably going to run short on time here. I'm going to try and get through everything I can. I may have to cut off the last two sections, and then those will still be available through the slide presentation, but I want to make sure that Margie has enough time as well for her piece. So the next things that we're going to talk about are inventory transfer versus transfer orders. So an inventory transfer, this is a simple transaction to move inventory from one warehouse to another. There are no other records created in this process. So an inventory transfer, you would say there's a field where you have a from, and then you have a to, you have the item or items, and then the number of items that you're going to move. It's a standalone transaction, nothing else happens in that process. An inventory transfer order is a transaction that triggers a series of events that facilitate moving the inventory from one warehouse to another. So if you think about a sales order represents something that needs to happen. You need to sell the product, you need to fulfill it, you need to send it to your customer. So, and there in the sales order process, there's a sales order, an item fulfillment, and then there's the billing process, which can either be an invoice or a cash sale. And in a transfer order, it's similar concept where you have different transactions that happen downstream from the transfer order. So some key elements of a transfer order that you can define a transfer cost, you can define a shipping method, and then you also define a ship to location. So you say, I'm going to take inventory from warehouse A and I'm going to ship it to warehouse B. And there you can define that cost associated and the elements of actually shipping that product to that warehouse. So here's the sequence of events. So once a transfer order is created, you define the products, the to and the from, and then an item fulfillment is first created to remove the inventory from the warehouse that they're in. And then you ship the product to the new warehouse. And then an item receipt is created to add the inventory to the receiving warehouse. This process is designed to be able to track inventory movement between physical locations. If items to be transferred are not in the from location to be shipped, then a back order will be created for that item. Much like a back order is created for an item on a sales order, if you don't have that item available to be fulfilled, or if the item isn't committed to the sales order. Then, when the item is received, it can automatically get committed to the inventory transfer. So in this case, you enter the transfer order, there's none available, but it represents that you need to ship it to another warehouse. Once you get some of that item into the from warehouse, then you could commit the inventory to that transfer order and then create the item fulfillment to send it to the receiving location. So those are the two processes in NetSuite that are designed for transferring inventory back and forth. You can, and a side note on the transfer order, it can also be used if you just want to move inventory between locations, even if you have maybe like a ghost location, which represents like damaged product location. You could use a transfer order to transfer product out of your main inventory into that other location. You can also use transfer orders to do, inventory transfer to do the same thing, but it doesn't necessarily have to be physical locations to use a transfer order. You can use it for other purposes as well. Okay. Question, the transfer order does not impact GL. That is correct, Megan. The transfer order, so here's a quick rule of thumb. Any transaction in NetSuite that has order in the name of it, sales order, transfer order, work order, none of those transactions have a GL impact. The GL impact comes from the transactions that happen downstream, such as an item fulfillment, an item receipt, an invoice, cash sale, vendor bill, all of those other things. So the transfer order in itself does not have the GL impact, but the item fulfillment and the item receipt would. All right, so next thing, importing and exporting inventory. The reason I talk about this is that if you have inventory in NetSuite and you manage the product information, the details, the fields and data on those records in NetSuite, it's a good idea to understand how to do CSV imports. So here's a couple of just high-level basics about CSV imports. Kit components, if you're using kits and packages, they have to be uploaded using multiple Excel files or multiple CSV files. There are other processes in NetSuite or other CSV imports that require a multiple file process. If you need to create kit and packages, I recommend familiarizing yourself with that multiple file process. You can create an upload template in Excel and then create a matching saved CSV import to save the mapping between the template and NetSuite fields. So if, let's say you have 20 or 30 or even 10 fields that you're populating every time you upload an item into NetSuite or you create a new item via CSV import, you don't want to have to do the mapping every single time. So you create a saved CSV import that matches your Excel file. That way, when you save it as a CSV, the mapping goes from your file into the NetSuite field automatically. That is the best practice for sure, is create a saved CSV import. Exporting is sometimes important to be able to manipulate item data in Excel. So exports can be done from item list views or saved searches. The fields can be exported basically, or whatever you would see on the screen. You can then manipulate the data and then re-import the changes. So let's say you wanted to just change all of your product titles, or if you wanted to change your pricing. Well, pricing is maybe a little bit more complicated if you have pricing schedules and whatnot set up, but you can do CSV import basically for any of the items in NetSuite. When you do a CSV import, you have to either have an internal ID or an external ID to define the item record that you want to update. I like the external IDs because they're typically a duplicate of the item name number, and so you can use that as your mapping point on your CSV import. So internal ID or external ID for that import process. So here's some other inventory related import options. You can import inventory adjustments. You can import inventory transfers. And actually, you didn't used to be able to, but you can also import inventory transfer orders. Creating these transactions through import can be a little bit tricky. Sometimes just requires a little bit of trial and error. You can always delete the record that you import if you mess it up. And then just keep trying through trial and error to get it to import correctly. Best practice, once you figure it out, make a template in Excel and then a matching saved CSV import in NetSuite. All right, so I'm going to move on. We're going to talk about inventory management. Inventory management. So in NetSuite, there are these fields, and I mentioned some of these fields earlier on. And the inventory management preferences is what defines and determines how these fields operate in NetSuite and how the calculations for these get set. So I will go into NetSuite and show you where these are here in just a moment. Inventory management preferences. So use lead time and safety stock per warehouse. So if you have multiple locations and you want the calculations to apply to each location individually, this is a checkbox that you will check. And I highly recommend turning this on if you have multiple locations. It doesn't really make sense to not use it if you have multiple locations. If you only have one location, then this isn't going to make any difference. default lead time. So you can define a default lead time. Lead time is basically the amount of time it takes from when you create a purchase order and send it to the vendor and then receive it into your warehouse. You can define a default lead time, although NetSuite will do an auto-calculated lead time for you. You can define a default safety stock. Safety stock basically is a stock level that indicates you never want to go below that stock level. A common practice is to have a default safety stock of 1, and that way NetSuite will do some of these other calculations correctly. But if you say I never want to go below 100 of this item in the system, then you can set, or this would be across all items, you can set default safety stocks. Typically, I prefer to do this at the item level, and so some of these don't make sense to set up defaults. It just depends on your business model. Maybe it makes sense in your case. You can have a deferred or a default preferred stock level. Preferred stock level is the level that NetSuite will recommend that you order up to. So if your preferred stock level is 100 and you have 10 on hand and NetSuite's saying you need to order more, it'll say you need to order 90 to get up to your preferred stock level. You can have define an order analysis interval, a seasonal analysis interval, and an estimated demand change. I'm going to actually talk about those in more detail here when we look at the inventory management preferences in NetSuite. Transactions to consider. There's 2 options. It'll either be sales orders or cash sales. So transactions to consider, this is an important setting because if you set it to sales orders, the transactions that NetSuite is going to use in its calculations for preferred stock levels or its demand calculations, it'll use sales orders, and sales orders don't have to be fulfilled or to use those calculations. Whereas if you set it as cash sales, then cash sales is invoices and cash sales, and that means that NetSuite will only do the demand calculation based on transactions that actually happened. You can have sales orders that don't actually happen and have demand calculated on them, which it may make sense in some cases. I think in most cases I see it set as cash sales. Then we also have day of week to perform calculation and time of day to perform calculation. So let's go into NetSuite and I'm going to show you those settings. So I need to get back to my normal tool. Oops. So these settings are under setup, accounting, and then inventory management preferences. So setup, accounting, inventory management preferences. And you do typically have to have an administrator role to be able to see these or to set these preferences. So here's all the fields I just talked about. Use lead time and safety stock per location. This is a multiple location environment, so this is checked. The default lead time set to 14 days. And if you're going through these and you're not quite sure what they do, always click on the field help and it'll help you figure out what that should be set as. A lot of the time, if you have these calculations being set per item, these defaults don't do anything. They just are there in the background just in case you don't have stuff happening at the item level. Here's your default preferred stock level. That's in a number of days. So the number of days is calculating basically how many you sell per day, and then it's saying I need to have 30 days worth of inventory for my preferred stock level. The order analysis interval, this one basically looks at where, Sarah, sorry, there will not be polling questions. The order analysis interval defines how far backwards NetSuite is looking to determine demand and to do the calculations for reorder points and preferred stock levels and lead time. So 6 months, 6 here means it's going to look back 6 months. It's going to take all of the transactions that happened in the last 6 months and use those in the calculations. The seasonal analysis interval is a little bit different, where this is going to look at a seasonal period. So what it does is it goes back 1 year and it looks forward the number of months that you show here. So here's one example. If you are a retail company and you have a spike of sales during the holiday season, in October, you may want to set the seasonal analysis interval to be 3. So if it's 3 months, it goes back to last October. It looks at all of the sales that happened in October, November, December, and then it uses those calculations for the seasonal analysis. And that is also set at the item level, which I'll show you in a minute. Instead of using the seasonal analysis interval, you could also use an estimated demand change. So you can say, instead of going back a year and then looking forward a certain number of months, you could say, I'm just going to take what NetSuite says I should have, and I'm going to increase it by 10%. Or I'm going to increase it by 20%, so that I know during my busy season, I'm going to be stocking up more. Now, this is kind of a broad change, and it may not make sense to go across your entire inventory and set the demand to be an increase. It's sometimes better to do it at the item level. So here, the transactions to consider, this used to say cash sales at one point. They changed it to say actual sales. And you can see that the actual sales uses cash sales, invoices, and assembly builds to do the calculations for reorder points and preferred stock levels. So this is where you would set that, orders or actual sales. And then these calculations happen automatically and then update all of the item records. So you can set the day of the week to perform the calculation, and then also the time of day to perform the calculation. And then NetSuite will do those calculations all the time, once a week at that point. You can also just hit submit and calculate if you want to manually trigger a recalculation of all of your reorder points and preferred stock levels. So real quick, I am going to, let's see. So I'm going to skip that. I'm going to go back to an item record in NetSuite. And so all of those are the default settings for the inventory management preferences. And then those also correspond to the inventory management settings that are set on the inventory items in NetSuite. And this is a perfect example of when you might want to use a CSV import, because you can use a CSV import to check the box for auto-calculate safety stock levels, or you can uncheck the seasonal demand. So here you can see, and NetSuite always kind of, it kind of word wraps these fields. So it's kind of hard. Let me see if I edit this record, if it shows up better. Not really. So here's, so basically this is the auto-calculate preferred stock levels. If I want it to auto-calculate, I would check that box. Reorder reorder multiples. If you have to order that item in multiple quantities, like if every time you order it, you have to order 2, you'd put 2 in here. But auto-calculate preferred stock level, auto-calculate reorder points. You can auto-calculate the lead times. And then here's where you can define a safety stock level in days, or you can define a safety stock in units at the location level down here. Typically, if you're using the location level, it's going to override this safety stock level in days. And so it doesn't necessarily make sense to have that set. If you use auto-calculate, then some of these fields don't become available anymore. So you can see the reorder point, the preferred stock level, and the lead time. Those are grayed out now. I can't set those manually when the auto-calculate is checked. If I uncheck that auto-calculate, then you can see that those fields become editable down below. But basically, NetSuite is doing the calculations for those moving forward when you check those boxes, so you don't have to worry about it anymore. In this case, we have the seasonal demand. So the seasonal demand, remember we set that in the inventory management preferences. We have the seasonal analysis interval set to 1 month, so it goes back 1 year and does 1 month, but then it also has to be checked on the item record for that to apply to that item. So you could say you only want it to do seasonal demand analysis for a certain set of your inventory items. And then the expected demand change, if nothing is populated here, then it's going to go by this value that's on the global preferences. If this is blank and this is blank, then there will not, or it's 0, I should say, then there will not be any demand change being calculated. So it'll just calculate based on actual transactions from the last 6 months. Okay. So using the inventory management preferences, it does correlate to also what's set on the item records in NetSuite. So you have to manage both of those to make sure that it's doing all the calculations correctly. So I am going to, quick questions. Will the inventory management tool change the rebuild points as well for manufacturing assemblies? I don't know how to answer that question. I think Margie might be able to answer that question, Stephen, but we'll come back to that a little bit later here. Ellen asks, once you check mark auto calculate, you can go back and uncheck later. I thought you couldn't go back after it's selected. You can go back. You can check it, auto calculate now, let NetSuite do the calculations, and then you can uncheck it later on. And if you want to manually adjust those values, you can uncheck it, yes. And then Suzanne, can you calculate costing updates without waiting for processing in the evening? When building assemblies, there's one item I usually have to wait on for 7 p.m. recalcs. Yes, I think so. There is, let's see, under account, no, let's see. Let me zoom out a bit. Setup, accounting, let's just take a look at that real quick. Inventory costing preferences. So Suzanne's referring to, so NetSuite does all of these cost calculations on a scheduled basis. And so this is where you define when those costing calculations happen. You can say after transaction entry, you can, well, it's not, let's see. You can define a custom schedule, but there's not really a way to say, go and calculate now, Suzanne. There's not that I'm aware of. If anybody else knows otherwise, please let me know. But typically, you kind of just have to wait for NetSuite to do all of its costing calculations. Okay, so let's move on. Like I said, I'm going to be short on time, and so I'm going to have to skip a couple sections. But I'll make sure we cover the main important points here. So auto calculate reorder points. I'm not going to go through this in detail, but the reorder points basically there's different ways that it can be calculated. If you click on the auto calculate reorder point box, the help window, it'll come up with these, it'll give you these little formulas. So it's important if you're using these auto calculations to understand how this works, because there's a without safety stock defined, with safety stock defined, and then with safety stock quantity defined. So how those auto calculates operate is dependent upon some other fields that are set on the items. So auto calculate for preferred stock levels and reorder points. This is a red flag. It's kind of a gotcha. The only thing I'm going to mention here is that if there's a long period with no sales, it does not mean that NetSuite is going to decrease the preferred stock levels. There has to be some sort of activity. So it's a little bit of a flaw, in my opinion, that the inventory calculations only happen when there's transactions that happen. So if you sell an item and then you don't sell it again for 6 months, that 6-month window, NetSuite will not be triggering new calculations for those preferred stock levels and reorder points, which is a little bit of a flaw, but maybe if you're not selling an item, if you're only selling one every 6 months, maybe it makes sense to not sell that anymore. I don't know. But that's just a little bit of a red flag gotcha. Okay, so this will be my last section. We're going to do purchase order to payment process. And so this is just to understand how the process works in NetSuite. So there's a lot of times when we're talking about a purchase order, you can be talking about a purchase order that you submit to a vendor to buy products, but maybe you sell products in a wholesale environment, and other companies might submit purchase orders to you. So I'm going to talk about kind of both perspectives. So the buyer side. So from the buyer side, you create a purchase order, and you can do that via CSV import or the order item screen. It can also be initiated from a purchase request if you use purchase request functionality. The next step is you'd print, fax, or email the purchase order to your vendor. At that point, the purchase order enters the receiving queue, and then the vendor ships you the product. Then you receive the purchase order, and an item receipt is created. When the item receipt is created, it updates stock levels, tracks how much is still on order if it's not fully received. It updates the total asset value of your inventory, and it allocates items to existing sales commitments and back orders if you have auto commitment turned on. You can have it so that there's commitment that happens manually or through a schedule as well. You don't have to have it auto committed. So let's see, next slide. So after that step, and after the item is received, an invoice is then received from the vendor, representing that you need to pay for the product you received. A vendor bill is created, basically to represent that invoice. Then a bill payment is created to actually send the money to the vendor. And on the bill payment record, that defines how the vendor will be paid: check, ACH, credit card, and then when the payment is due. At that point, the PO now has the status of fully billed. So that's the purchase to payment process from a buyer's perspective. In this case, your company is purchasing product from another vendor. So here's just a quick graphic, excuse me, of this. So there's a couple of different methods of receiving inventory and billing. First of all, we can receive items from the purchase order. For items received, inventory is updated and a vendor bill is created. Then all items on the purchase order are now received. That's a question. We can say yes, they are. Then the purchase order status is fully billed. We can also say no, they're not fully received. So then the purchase order status at that point is partially received pending billing. And then once the additional items are received, it goes back to this stage of the process. So that's method one for receiving inventory and billing. The other method is you can bill in advance of receipt, basically. So here you would receive items on the purchase order, inventory is updated for the items received. Are all items on the purchase order now received? Yes. Then the purchase order goes into the billing queue. If they're not, then it can go into this process. So is bill in advance of receiving enabled? If it is, then the purchase order can be fully billed even for the items that you have not received yet. If bill in advance of receiving is not enabled, then the purchase order remains in the receiving queue, does not go in for billing at all. There are some ramifications of billing in advance of receipt. In some cases, you might have very large companies that you purchase from that don't care if you've received it or not. They're going to send you an invoice right away anyway. In a lot of cases, best practice is to don't enable this feature unless you have very specific reasons to do so. Okay. So that is the purchase order to payment process from the buyer side. Now we're going to talk about it from a seller's perspective. In this case, you are the seller, so you receive a PO from a buyer. You enter a sales order into NetSuite for the purchase order that you received from your customer. So there's a couple different types of sales orders. I'll just go through this real quick. There's standard sales orders. It'll let you create an invoice or a cash sale based on whether you enter billing terms or a payment method on the sales order. You can have sales orders that go to a cash sale only. You can have sales orders that go to an invoice only, and then you can have sales orders that go through a progress billing situation. Progress sales can be billed at intervals according to the item fulfillment of the goods or services. So here's the graphic of the seller side. So you create a sales order from an estimate or just enter a sales order. Does it require approval? No. Then the sales order goes right into the fulfillment queue to be fulfilled. If it does require approval, then it goes through maybe a sales order approval workflow. Once it gets approved, it would go into the fulfillment queue. If not, then it would get canceled at that point. So just basically a high level of the process again. PO is received from the buyer. You enter a sales order for the PO. It's either pending approval or pending fulfillment. Once it's approved, you create the item fulfillment. Once it's fulfilled, the sales order is marked as pending billing. You bill a sales order. When you bill a sales order, it turns it into an invoice or a cash sale, and the cash sale or invoice is the end of the line for the sales order. Invoices still need to have a payment applied to them, but a cash sale represents payment already received. So that is the end of the seller side part of that process. So I am going to have to stop at this point. I want to make sure that Margie has enough time to go through her information, and we're going to probably be very compressed on our open forum at the end. We may not be able to do it today. If we do have some follow-up questions, we can absolutely use our LinkedIn forum to follow up with those questions. So I am going to stop there. And while we do that, we're going to take a 5-minute break. This time, we'll go ahead and get started. I also just wanted to mention real quick, there's only 2 sections that I left off, and they had to do with drop shipping and special orders. So they're kind of specialized, but I will have the slides available on my presentation for those as well. So that's the only thing I couldn't get to. Margie, I'll let you go ahead and take it from there.
All right, great. Thank you, Cory. Thanks for all that great information this morning. Based on that, we are definitely running way behind schedule. We will be going till noon. So unfortunately, I don't know that we'll have time for the open forum section. Yeah, there's a lot to cover in inventory. In fact, even my section of the presentation really should be 3 hours, and I'm having to cut it way back. So what I've done instead is, if you've downloaded the slides, there's a ton of slides there that provide additional value, because I want to show you more that's actually in the system itself. Cory, someone's asked how they can get the presentation, so if you can let them know, I'd really appreciate that while I'm talking here. So my name is Margie Komninos, and I work for PlantScan Corporation. We are a manufacturing company, and we make ultrasonic leak detectors that are used in predictive and preventive maintenance. They're basically like little computers. And I'm only bringing this up because when I talk about some of these things, you'll see that these are these kits. We don't actually sell them as kits. We sell them as assembled items, because kits can't not have serial numbers. So we actually have them as assembly items that we've put together. So when I talk about a unit within the kit, it's like this little blue thing or this black thing. Can you all see my cursor? I just want to make sure. I know Cory had that cool little cursor, but can you just see regular cursor when I'm
we do. Yeah, we see it.
Thank you. So then, a kit is made up of a base unit product, headphones, accessories, and then they're put into a carrying case. So just to give you an idea of who we are, what we make, so you'll maybe be able to relate a little bit more when I talk about things. So moving forward, this is what I'm going to be covering here in the second part. And then finally, the next thing I want to show is what we're not covering. And we're not covering, these are the things in yellow that I am covering. We aren't covering, these are all parts of the advanced inventory module that I know a lot of you said you're interested in. So we're some of these things were already covered by Cory. We are not covering, I know there's been some people that have emailed me saying about lot management and the new suite app, the new free suite app. We are not covering that. We're not covering advanced bill of materials in depth. That's the ability to separate the bill of materials or the BOM, the components from the item itself. Really cool feature, and if I was starting from scratch, I'd probably go with it, but it's difficult to change. And then finally, we're not going to be going into the supply chain management bundle, which is a free bundle that includes various aspects like estimated landed costs and engineering change order, things like that. What I am going to be covering today requires a number of features that have been enabled, that you have to enable under Setup, Company Enable Features under the Item and Inventory tab. Can everybody hear me okay? Just want to make sure the volume's correct.
Yep, sounds good.
Okay, great.
Yes.
So for what I'm going to be discussing today, assembly items, work orders, serialized inventory, landed cost, and then inventory counting. All these things should be checked. Inventory count is what I'm going to be talking about first, and it's basically the cycle counting. So the first thing I'm going to talk about is cycle counting, and the reason why I don't have this in full slide mode is because I'm going to be, skipping some of the slides, and I know if you've downloaded this presentation, there's a lot of slides in between that will give you additional information. So if you can just, if that works for you, I hope so. So cycle counting, it's basically inventory adjustments on steroids. And it's kind of like inventory adjustments meets inventory worksheet. So it's kind of cool because it also works for those people that do LIFO, FIFO. It allows you to do inventory counts on a regular basis. So say you have, we're a manufacturing plant, so we have items, hardware items, we have electronic items, and so you want to do some of those based on every, maybe 60 days each one, but you want to do all the electronic parts you'll count on a certain date, and then you'll do the hardware parts on a different date. Or maybe you do it like Cory showed earlier with those bins, where you have rows and columns that you want to do it in certain orders, the way that your plant is sent, your company is set with the physical inventory. So one of the really cool things about it that I love, so even if I'm doing an inventory adjustment that's requiring tons of entries, it allows you don't have to do the math anymore. So I know he didn't demonstrate an inventory adjustment, but it basically says, okay, here's your beginning inventory. How do you want to adjust it, up or down? And you have to say, I want minus, it's 1,000 items. I really have, 962, and you have to do the math and figure out what that adjustment should be, up or down, by negative or positive, which invites a ton of errors. So I really like this. Plus, if the inventory adjustment, you actually have to say, okay, you enter in each item, whereas this kind of looks like an inventory worksheet in that it lets you actually check off boxes. So you just say, I want to track these items, and it'll automatically do the rest for you. All you have to do is enter the end count, and we'll see this in just a moment. And like I said, the fact is that the end result is an inventory adjustment, and that's why it works with LIFO and FIFO, as opposed to a worksheet, which would change that to average counting and won't really work. Setup is very simple. As I mentioned before, inventory count needs to be checked under the enable features. Then you define a default account for the inventory adjustments. It's optional, but just like you do an inventory adjustment today, that field, the adjust account field that you have to enter every time, this just pre-populates that. So it's sort of a global setting for it, a system-wide setting. And finally, you need to update each record. So you're going to put in a next count date and a count interval. And there's two methods to update each record. One, manually, don't recommend. CSV, highly recommend. It won't work with mass imports, unfortunately. This is optional. I say it's optional, but you're going to probably want to do it. It provides the ability to actually display a checkbox, a list, and you can just check off the items you want to count. Whereas if you don't set any of this, you can still do the cycle counting, but you have to enter every item like it's in inventory like you do in an inventory adjustments. So to see what I'm talking about, there's actually 4 new fields that will appear if you turn on and check that box, inventory count. I'm not showing the last field, which is a classification field. We don't use it. I do have a slide further on about it. It's sort of an industry standard using the classifications A, B, and C. It took me a long time to know that. I kept saying, well, why in the world is only A, B, C? Why can't I add to it? And thanks to Dana, who finally explained it was an inventory standard. Most of you may already know that, but I didn't. So the 3 main fields that are added that you will be using is this last count date, and this is showing for something that's a multi-location inventory. If it's not, it'll be somewhere else up in the record under a different section, I think under classification section. So you have last count date, which you do not enter, because that's when you do a cycle count, it will update it. You enter when you initially turn this on, you said, what is the first count date that I want this to happen? And then once you do that, NetSuite will update this based on this count interval. So it'll add the number of days to that. So you put in here the count interval, which is in days. So if you're only going to do it once a year, you put 365 in here. The next slide, we're going to go right into showing you. So I really like the ability to show you and walk through situations, walk through in a live scenario. So taking a look here, I wanted to show a couple things. One, here is an item where I've already checked that box. So if we go down to the inventory, you can see that the fields have been updated here. It says the last count date, because obviously I've done this before. Well, the next count date, it says since the interval was 1, the last one was done on the 18th, it figured out that it was 9/19 that it should occur. So basically, if you're just starting out and you don't really know what your count interval should be, if your company is new or you really don't keep track of, you don't do it on a regular basis at all, it just sort of happens at intervals. Maybe you have a contract manufacturer that whenever they feel like it, they send you the current update. Just put the count interval as 1. You can always update it later. And then I wanted to show you, just for the demonstration purposes, so this is slide cover, and then I had created another item, slide cover without the cycle count, without the cycle counting information entered. So if we then go to this product, it's the exact same product, but notice there's no next count date, no count interval. So you'll see how they work a little bit differently. So I'm going to go over now, and the way you actually do this is you you go to transactions, you go to inventory, and there's 2 options, create inventory count and enter inventory count. A little bit confusing. Create inventory count is what gives you that worksheet look, where it's a list with check boxes. The enter inventory count is if you want it to look more like an inventory adjustment, in that you actually enter in the fields. So if you've got a time when it's like, oh no, we need to build this product, or it seems off on these certain these certain items, then you might want to use the enter inventory count if an inventory adjustment would just take too much time and to have to do the math yourself. We're going to do a create inventory count. And we're going to go ahead and put in the location here. Which is one of the locations that we build at. Now notice only 1 item is coming up. That's because of this count start date and count end date. And I just wanted to explain, the count start date actually refers to the next count date that's in that item record that we just looked at. If it's blank, it'll select everything and just kind of ignore it. Otherwise, it's going to filter this list to show only the items that require a count on or after the date entered in this field here. Whereas the count end date And you can, bring up help and it'll give you the information too. The count end date refers to the last count date that was in the item record. And if it blank again, it ignores it. Otherwise, it filters the list to show only items that require a count on or before the date entered in this field. So by simply just removing this, you'll see I get a lot more items. Additionally, in the create count, if you customize, I'm not going to go into it now, but you can add columns and you can add filters like NetSuite allows in various pages throughout the system. So I've added it's a component of, so I can actually say it's a component of a PSI, or it's a component of a PSX. These are different products, so it'll actually further qualify it. Or I can say it's by preferred vendor, or I can say it's an electronic part or a hardware part. So you can see that this will change if I say now I want to look at all parts in the system that have the landed cost put on. So I'm going to just go ahead and just look at these hardware parts here and reduce the list a bit. And if I have to actually select which ones I want to count. And I go, wow, what about the slide cover that no cycle inventory count, no, the slide cover where nothing's been set for it? How do I then see that? That's where you can do it in the next step. So even if you don't have cycle counting, then it will start looking like a enter inventory count. So I'm going to go ahead and submit this. I can't add it at this point, but I can submit this and then I can edit the list and I can add that one. So here I've submitted it. It now goes into a state of being open. At this point I can edit it and add that other slide cover. Either that or I could have just entered them all via the enter inventory count. So it basically gives you two entries, and this one's it's kind of like a WYSIWYG, only it doesn't really give you exact instructions that you need to do. So now at this point I can add this item. You can also put in memos. You can change the rates and such. If the rate is going to increase, or if the quantity will end up increasing, it'll use the rate. But if it decreases it, just like in an inventory adjustment, it'll ignore whatever rate you put. So I'm going to go ahead and save this now. So some of the things that I don't like, I don't know if you noticed on the first page, I had to actually check off the list of every item that I wanted to do cycle counting for. I would like to have it have a select all or and a deselect all. Unfortunately, that's an enhancement request. So at this point, it's open. Now I'm going to hit start count. At start count is when it takes a snapshot, an actual snapshot of what is on hand at this point in time. So, but when I complete this whole process and approve it, at that point in time, it does the inventory adjustment, not based on this start date, but on the actual date you approve it. So you have to kind of be careful not to have, try and not impact the inventory in between those time frames. So I'm going to go ahead and start it. And that's why it says before starting the count, apply any pending transactions. I don't know if you caught that. So at this point, if I were just say complete count, nothing would be generated because I haven't put in any counts. But this is the first time that you can actually, oh, and by the way, you can sort these. When you're in the original one, you can actually sort. I don't know if you can sort these at this point, but in the original screen where you show the list, you can sort them by any of the fields that you're showing, which is nice because then it will pull through to the rest of this. So if you have a display name of your part, you could just sort them by display name too, or vendor code. At this point is when I actually put in my new count. The other thing that I really don't like about this is it doesn't show your current count. So you have no idea if it's going to be off by a tremendous amount or just a little bit amount. So it's not until you actually complete it that it shows that, and I wish it did. And even if you put in a field, those fields disappear, the ones that you've added in, like, if you've added some additional columns to show. So we're going to go ahead and say slide cover 500, nose cone gold 200. This one is 900, and this one is 5. So if you leave any of these blank, it's not going to add, put it into the inventory adjustment. It's like, oh, it's just going to ignore it at that time. But now I've put in this information for all those line items. I'm going to save it. It's still in started mode. I'm going to save it. And it's not until I hit, and then I'd say, oh, wait, I made a typo error here, and you can edit it. Otherwise, you go, that looks good. So you complete your count. And at that point, it's going to show you what the inventory adjustment's going to be. It's going to show you you see it did the math automatically for you, which is very cool. In fact, it'll create 2 inventory adjustments, one for anything that's negative, the other for anything that's positive, that's an increase in inventory. So if I said, oh, this is maybe wrong, it can't be that far off, this is an expensive part, I could go in and reject it. Then I could edit it and I'd go back into the process again. We're going to just go ahead and approve it at this point in time. Oh, and by the way, I know I'm covering a lot of information very quickly. On that first slide, I actually put my email. So if there's any questions that come up, we invite you to post it on our open forum. But if you aren't comfortable like posting it to everybody, then you can just email me, and if it's a quick answer, I'll definitely be happy to answer that for you. So now it's been approved. Well, okay, so what does that mean? Well, once it's approved, you go to the History tab, and you go to Inventory Adjustments, and you'll now see that 2 inventory adjustments have been created, and you could go in and modify them. So let's just look at this first one real quickly. And if you knew you wanted to change that date, of course, these things are going to change if you've done inventory in between. But this just kind of gives you an example of how it will look. So it does end up creating that inventory adjustment for you. Let's see, someone is asking a question. Can you see the GL impact prior to approving? No, because no inventory adjustment has been made. It's not until you actually approve it that the inventory adjustment is made. Since this sets the inventory amounts to the amount specified, what would happen if someone were to backdate an inventory transaction before these entries took place? Then you would have some problems. If someone went back, you'd have to, it's just like with any inventory adjustment. I mean, just imagine you've done an inventory adjustment at this point in time, and then someone backdates something. It's going to impact because it took a snapshot at the moment I said start, that it took a snapshot. So it thought the inventory was that. So if the inventory was something different, it is going to impact it. Where do you select the bin and lot number that is being impacted? Oh, if I had a bin numbered, something that was bin numbered, then it would say enter in the bin, and another field would pop up. So that's where it would happen. Let's see. So I think those are the questions. I do want to go back to my presentation real briefly here and go over a few other things. This is the CSV import, what the mapping should look like if you decide to turn this on. This is the whole count process. So this is just showing what I did and what happens and what state it's in, whether it's in start, complete, approve, reject. This also cautions you that you shouldn't have any changes at this during the points in time, and also just sort of reiterates that the inventory adjustment happens at the time that you approve it, and it's not based upon when you started it. So this just talks about those two fields, the count start and count start date and end date. There is another screen that I didn't show. You can go to page inventory counts that shows you all of this various cycle counts you've done, what state they're in. So if you have something that's in the completed pending approval and you've forgotten about it, you will not be able to do another cycle count because it basically has paused that item. This is sort of comparing the standard inventory adjustment versus the inventory adjustment via cycle counting. And this is a slide that kind of explains what that A, B, and C classification is, the industry standard being that A is 80, these products provide 80% of the revenue and 20% of the items. So it's the ease of the just inventory worksheet, but it generates inventory adjustments so you can use it with LIFO and FIFO, and it reduces human errors. Those are probably the key points there. Someone has asked about, okay, thank you, Dana, for responding to that question. At this point, if there's no other questions for cycle counting, I'm going to move forward into the landed cost. And if you do have questions, we'll probably don't have time anyway to address them at this point in time. So let's move into a landed cost. And this is a really important feature in that I also do some part-time NetSuite consulting. And seems like a lot of people aren't using this that I've worked with, or a few people aren't using it that I've worked with. And basically, landed cost is very key because it's all the costs related to the purchase of the product outside the material costs that you now apply to that inventory, to that item. And it's really important because it takes, well, first of all, it takes into account anything that you want to add, like shipping charges, handling charges, tariffs, insurance. And we also add the vendor setup fees. So for instance, we have some products that are milled for us to our specifications that we've designed, but they build. And every time they run it, because these are hardware parts, they have a setup fee maybe of $100 if they're going to make some wrenches for us. And so whether we're making 50 of them or 1,000 of them, that setup fee is still going to be $100. So we want to actually have that as part of the inventory item, the value of that. So it basically tells you what does your item really cost. And then it tells you, what is your real profit of the item? Because if you don't know what the item really costs that you end up selling, you can't really know the real profit. Also, it helps determine the price for your item. So if you're, so here's an example, a headset behind the headset. We purchased it at $28, but with the shipping, it costs almost $33. So if we were selling it for $32, we'd actually be losing money. So, and then this headset actually goes into it's a component of several products that we sell. So if you start looking at these landed costs, even if it's just 0.001, of a dollar, it's part of a penny. It's not even a whole penny. Those start adding up depending on the quantities and such. So I highly recommend that people take advantage and use landed costs. It's a little bit to set up, but and I would say setup would probably take a few hours, but once it's set up, it's very easy to use. And so we'll actually look at the setting up of that and then how to use it, and I'll go through an example from start to finish. So to set this up, you need to enable the landed cost field under enable features. And then we recommend that you create in your chart of accounts whatever landed cost categories you want as a separate expense item. And it's for auditing. Plus, at the end of the day, if you use landed costs, so it's taking like shipping and applying it to the inventory items, therefore, your normal shipping item, your normal chart of accounts item would show that it had shipping, but this should end up being 0 at all times. So it's also a really good way if you have separate chart of accounts for the shipping and the setup fees and things like that. You can all have it in one, but at the end of the day, it should be balanced out to 0. So it's an optional one, but highly recommended. These 3 and 4 are really key here. 3 is you need to create these landed cost categories, and these will actually show on the landed cost tab on the receipt or the landed cost tab on the bill. So just so you understand what I mean by that, here's what I mean. An item receipt is showing here all the landed cost tab. It shows shipping, duty charge, handling charge, second shipping charge. These are the landed cost categories. So you set that up by going to set up accounting lists. That's also where you set up your terms, and there's various things that you set up there. This is where you choose cost category and you add your landed cost categories. And then finally there's the create landed, well not finally, the fourth thing that's really important is the create landed cost items. So for each of these in item 3, you're going to define the expense account that it goes to, and the same expense account should show on this landed cost items that you're going to create. So the landed cost categories appear on the item receipts, or if you don't do an item receipt, it would appear under a landed cost tab on your bill, whereas the create landed cost items are actually items that you create in NetSuite, and usually it's an other charge item that you create in NetSuite, which will be a contra to this. So you have the same expense account identified in each from the chart of accounts, but this one would be a contra to this. So the landed cost items would actually appear in the bill here. So when you do the bill, instead of just having an expense, which means that those expense of the shipping will not go to anything, to an item, this is the contra account to that item receipt. So you need to, and you put it on the items tab, not on the expense tab. So those are the fields you need to set up. And then finally, you need to say, well, which items do you want to use would you want to track landed costs for? So you can do that easily through direct list editing, mass updates, or CSV import. Obviously, I would choose mass updates. I think that is by far the easiest way to do it. The landed cost here, the landed cost, let me make this just a little bit smaller. Okay. Here you can see the landed cost accounting. This is basically taking that list that shows up on the item receipt and all those descriptions, and I've expanded it here. Once you drill into it and you enter this, it creates, you have to enter the expense account, and that expense account should be the same thing that appears on your item that you create for your landed cost item, which I put in as other charge for purchase. So this is the contra account to this cost category. So if I, and we're going to show this in just a minute. So let's see. I'm going to go through and at this point just sort of demonstrate what I've just been talking about. So going back to here, I'm going to close out some of these windows here. And can someone mute? All right. So we're going to go ahead and demonstrate some of these things with landed costs that I just talked about. So just want to make sure I've covered everything that I wanted to cover there. So I talked about setting up that list. So if we go to lists if we go to, excuse me, if we go to setup, accounting lists, you can see that these are what I've entered as far as what I'm showing. Now, they looked a little bit different when I showed you that slide from the item receipt. And that's because they show up based upon the order you enter them. This is like really key here. Because if you enter them and you enter something that you hardly ever use as the first item, like maybe special landed, costs of setup fees, that's going to appear first. So you look at this internal ID, and that is the order it's going to do it in, as opposed to other times when you're going to refer to landed cost categories, it's going to do it in alphabetical order. So that's just something to be aware of. So if I look at shipping, you can see that I put it in to go to landed costs, just this 7,500 landed costs. Meanwhile, if I go back to this, if I did handling charge, it's two separate items, but it goes to the same landed cost item, the same landed cost expense account. So that's really important. So you can have multiple categories that will show separately, but they will all end up in the same expense account. But meanwhile here, for this other one, for the setup fees, I've created a different landed cost expense account for that. So that's what I wanted to show there. I also wanted to show that on an inventory item here, nose cone black, you can see that I've checked the box that says track landed costs. So that's the only thing you need to check. Meanwhile, for those items, if I look at, I've called them landed costs just to be able to easily identify them. I have these three items. So the landed cost, shipping and handling item, if you go to the accounting tab, it matches the one from the cost category. So that's what I wanted to show there. Now I'm going to actually go into sort of a scenario, and we're going to go through as if we're actually processing this so you can see what it looks like once it's set up. So we're going to assume that we're going to have a purchase order, and the item receipt is going to be done by the warehouse manager. So they're going to take the packing slip out of that, and they're going to write on that packing slip whether that quantity was correct or whether they have to make some adjustments up or down. Maybe they overshipped and not charging you, or undershipped and you still are owed some, there's still some things on back order. So they're going to give you the packing slip, and on that packing slip they should circle the amount, they should put in the date they received it, and then they can even, once they do the item receipt, they can actually write the item receipt document number on there if they want. At that point they have to get it to the accounts payable person, who's actually going to receive the bills, and if the bills aren't the bills shouldn't be entered until actually they've received that information from the warehouse manager, because maybe they didn't receive all the parts that are on the packing slip. The AP, accounts payable, is going to go ahead and they're going to add in the handling, the shipping costs, the handling costs, and anything else. So that's our scenario that we're going to go through right now. So I'm going to go ahead, and I have a purchase order that I have here. And as the warehouse manager, I'm going to go ahead and receive it, whether it was one item or all items. And I'm going to say, okay, yes, we received 200 of these. Yes, we received 1,000 of these. And at that point, they would just do a save, not a save and bill, unless this person doing that is doing both the receiving and billing. Usually they're two separate people. So the one thing I want to show you here is this landed cost per item, because once you've changed it, once you've set it as landed cost per item, you can't change it back. So right now, you can see that I have a landed cost tab where I can put in the shipping and all of that. Obviously, this warehouse manager isn't going to do it. But over there, if I check this box and say, I want to do land cost per line item, when I go back to the land cost tab, everything's grayed out because it's assuming you're going to do everything. So you can't mix and match. You can't say like, oh, I know I have tariffs on this one item, but I want to do shipping on all of it. So you have to know at that point in time whether, you know, the shipping would also have to be defined, as well as the tariff charges would have to be defined. So that's sort of a shame that you can't mix and match, but you can't. So this is one way to do it at the landed cost per line, or the landed cost for everything, and it's divided up. So I'm bringing this up because you need to know which vendors actually do landed cost per line. So if you have specific vendors that do it, you need to do it now, because once this is saved, you can't change it. So if that's the case, maybe you would have a custom field that says this vendor always has, always has landed cost per line. We don't have any vendors that do landed cost per line, so that's not really an issue for us. At this point, I would save this as a warehouse manager. And then for the accounts payable person now receiving this, they would go into the bill purchase orders page. Now,
Margie, there's a question in the chat window.
Oh, could the item receipt be broken up into, oh, absolutely. The item receipt could be broken up into two parts to get around that. You can absolutely do that. And oftentimes an item receipt is broken up into two parts anyway, because you don't receive all the parts. But Benjamin, that is a great point. You could do two different item receipts to get around that problem. However, if you have a bill with one shipping item, I'm not really sure it provides any value, because you would still have to figure out what does the shipping get applied to. So I don't know that it would provide all that much value for you, because you can put in the shipping per line. So when you do the second item receipt, then you would still, then that second item would maybe have all the shipping. So, but yes, you can do it in two parts. At this point, I know that this was DPP. This is the one that we just did. So as the accounts payable person, I'd go into that item itself. Let's see, there's another question. How to allocate LC to multiple POs received in the same container? I don't know what LC is.
Landed cost.
Oh, okay. Landed cost to multiple POs received in the same container. Do you get one bill for that container? You do. Okay, then you could still, if it's one PO that you've created, and do you need to indicate what container it is? I guess to me, if it's one, there is something that NetSuite provides that deals with containers. So I've never dealt with containers, but if I were to get a box that had multiple POs, I would be receiving based on the PO. So I don't know that I can really answer your question, since it's multiple POs and you receive based on the PO. You would have to do multiple receipts for that PO. And if the shipping is on the container, then you would have to divide that up probably yourself if the shipping is on the container. I don't know if that really answered your question for you. So here we are. This is the accounts payable person at this point in time. And I want to make sure that the item receipt I'm doing, because I might have multiple POs from that same vendor. So I want to make sure that this is the right item receipt. So I go, yes, that's the right item receipt. So at this point, I would edit the item receipt. And then I would go to landed cost. And I would say, since it was multiple items and I don't keep track by weight, I would say it's not by quantity, because if you look at those items, they have very different prices. I want to do it based on value. Now, what I wish NetSuite would have is an option to default this to value, because otherwise I would just use that all the time, but it doesn't. So now I would say, okay, well, maybe it had $50 in shipping, setup fees were $100, the handling fee was $10, and I could go ahead and save that, and then bill it, save and bill, and at that point I'd be done. But in this scenario, just because I wanted to show you how it works with third-party shipping, I'm going to say shipping actually is coming on our own account, and so therefore I want to leave that blank, and I'll come back to this at another point in time. So I'm just going to do the handling charge and the special landed cost charge, and I'm going to go ahead and save and bill, because this is all that appears on the bill. If the shipping was charged to a third-party shipper, then that's going to be completely separate. So at this point that I say save the item receipt, it's going to go and it's going to recalculate. So if I look at this item here, and you can see that, and I refresh this, you can see that it's pending, because it's saying the average cost was $1. But that's because right now under this cost accounting status, which I highly recommend you add, because if I just went in, I'd go, oh, well, the average cost didn't change because there were no items that existed before this time. So it should have, because I just added the handling and the setup fees. That's because this cost accounting status is in pending mode. So I highly recommend that you add this to show on all your item forms. And you can do that just by customizing your form, going to the General tab, and then checking the box that says Cost Accounting Status. So going back here, we now want to go ahead and bill this. And what I need to do is I need to create those contra accounts. So maybe this is PO, or excuse me, the bill was bill 123. And I go ahead and say landed cost, and I would say shipping and handling. And I know that that was $10, and I'd say landed cost, setup fees. So now this was $100. So at this point in time, by saving this, I've now created the contra to the item receipt, and it should balance out to 0 if you were to look at the chart of, if you were to look at the general ledger. So if you've actually sold things since you've done the item receipt, and before, if you've received the items and then you sell them, and then you actually do the item receipt and put the values in, don't worry, as long as the accounting period is open, it will go ahead and roll through the sold items COGS and update those to include the new values. So all that is taken care of for you. So as I said, I wanted to also show you the what happens if you have a third-party shipping. So let's go ahead and look at that. And this is a bill, third-party shipping bill that I got from FedEx. Let's say I get this, days later. And what I want you to notice here is that instead of it going on an expense tab for shipping, I actually used the item. I put it under items, and it's the landed cost, shipping and handling. And this is a $50. So, but the other thing that I want you to show at this point in time, this is where the landed cost categories also come into play, because I would say, oh, this was shipping, this was additional export, import, duties that I got from, FedEx that were sent later. So whatever that category is, but it's important that you choose the shipping category, because then, and I'll show you, and you don't have to do it this way, but you could not use the shipping category and just go back to the item receipt and say, oh, now I've got $50. But the value of this is that now I go back to my item receipt that I had. And I go back to my landed cost tab. And now I can put in shipping. So I could have put in $50, but since I put in that category, I now have the option to go to other transactions and say, oh, this was a FedEx bill. And it'll come up with all the FedEx bills that are maybe open to be applied to item receipts. And this is the right one here, dated 9/22. And then you can see it's grayed out. And then it will go ahead and apply that and make the adjustments to the underlying inventory items. So I think that's pretty cool that you can do it that way. So you kind of have a choice when you have a third-party billing. Do you want it to come up automatically, or do you want it where you put in the shipping charges individually? The downside of this is that bill, if you've got multiples of these landed cost shippings, it summarizes them. So if I had another one, it was $30, you could only apply it to one item receipt, and it automatically comes up as 80. So in that case, you wouldn't want to use this landed cost category, and you would just want to divide it up yourself. So a question about the close period, I'm going to be talking about that next. So I'm glad you brought that up. So we're going to go now back to the presentation here, and just a few things before that. I wanted you to see, I talked about the contra account, but here's the item receipt, and you can see the GL impact of the landed cost here. It's a credit, and then when you do the bill, it debits it. I just wanted to also show you the landed cost allocation method. You can't use these on line level. You can only use these if you have it using the landed cost tab, and these are the various calculations. If you only have one line item, then quantity is a no-brainer. If you don't use weight at all, I use value most of the time. This is just reiterating that you must know the type of item receipt at the time of it's actually entered, the items being received, because you can't change it once you have entered in the item receipt. Just giving you more information. These are all just bonus slides for you. Standard cost item. When landed costs are associated to item receipts or vendor bills, they're not capitalized, but they're rather charged to a variance account. So for standard cost items, it works completely different, and I would just talk to someone that's in the know about standard cost items. But for average costs, LIFO, FIFO, et cetera, it'll work perfectly. So landed cost close periods. Yes, this is a problem. How do you deal with it? These are just giving you some options of what you can do using the current date. Of course, that doesn't help for those things in a closed period. So, because you can't post to a closed period because it impacts GL. You can reopen the period, but that's going to impact your books. So a couple of things that you can consider. There is, as I said, there's a supply chain bundle that's free. It has estimated costing in it, so you can look at the estimated landing costs, or you can just estimate your landed cost And any differences, if it's something that you order on a regular basis, then you kind of have an idea, and you can always go back and then just write off those charges. Also, I don't know if you all are familiar with Marty Zigman. If not, highly recommend you start looking at his blog. He always has great ideas, interesting workarounds. He also, his company is Prolecto, and I haven't looked at it, but he has a very sophisticated bundle to deal with these estimating the landed cost too. So you might want to look at both of those. The next thing I wanted to, let's see, a couple of tips. If you are going to use landed costs, make sure that you either do not set this, because you have an option to include landed costs in your last purchase price. And if you do that, but you haven't set a purchase price in your items, then guess what happens when you create your next purchase order? It actually brings up as the price that last purchase price with the landed costs. So just be careful if you're going to include landed costs in last purchase price, because you might be wanting to run saved searches based upon that, or maybe figure out the cost of a product that you assemble. Just keep in mind these little tips here. So what's the difference between using expense categories versus non-inventory items or other charges items that point to an expense account? Using expense categories versus non-inventory items. Janet, I don't really understand your question, because it's kind of, if you're talking about expense categories that are on the costing categories, that's an expense account. You need to use an expense account. Non-inventory item, I don't know if you can make it as a non-inventory item. I would ask Dana maybe to pipe in there, since it starts dealing with GL, and I'm not really an accounting person. Expense categories on the expense tab on the PO. I don't know. Can someone else jump in and answer that? Because I'm not really clear.
Dana had to jump, but maybe we can take that offline onto the LinkedIn forum for afterwards.
Okay. All right. Great idea. So at this point, I'm going to go ahead and move on to assembly items. Assembly items, as Cory talked about briefly, he said an assembly item is basically an item that's made up of one or more components but identified as a single item. So for instance, if you sell skis, some of those skis come in where the skis and the bindings are separate. You mount them, they pick the ski, they pick the binding, and you sell them together. That would be an assembly item, versus some skis come in with pre-mounted bindings that actually you can adjust. So then that would not be, you would maybe not use that as an assembly item, but that's an item in and of itself. So usually think of assembly items as one or more components that makes up a single item that you either sell or that goes into the production of other items. Serialized inventory, on the other hand, if you're selling skis, each ski that you receive has a unique serial number, because you actually, usually wherever you generally ski at, you register your ski with the security, and therefore if they're stolen or lost, they'll be able to identify your skis. So we use serial numbers for everything that we sell, but a lot of people, don't have serial numbers. It's an extra, there is extra overhead that's associated with that. The other thing that I wanted to mention, other than checking these two boxes and enable features, or at least assembly items, there are some other options that you can select for under setup, manufacturing preferences, because you need to check this if you actually want to purchase an assembly item. So and you might want to purchase an assembly item because you unbuild it and then you use components in another part. Or if you used to build this some product, but now you have a vendor doing that for you, but you don't want to actually change and create, because you can't go from an assembly item to a regular inventory item. So you'll just say, okay, well, now I'm going to just treat this assembly item like it's just an inventory item. So I'm going to go ahead and start showing some things on this right now. And I know we are starting to run really short on time here. I'm going to go ahead and go into an item here. I'm going to show an item here. This is an item that we sell. Kit. We call it a kit, but because it's serialized, it's actually not what NetSuite calls a kit. And I'm going to show a couple things here. So this item, an assembly item, this happens to be serialized, but most of these things you're going to see, whether it's serialized or not, you're going to start seeing some additional fields, and it's still populating here. Apologize for that. The most important thing you're going to see is under inventory, you're going to see this components tab. This is if you're using the regular, if you're not using advanced bill of materials. If you're using advanced bill of materials, you won't see this components tab, but instead you'll see something up here that says manufacturing. Here you see all the items that go into making this kit. So some interesting things here is these are all stock items. I'm going to be talking about something called Phantom in a little while. So you see this replacement headset. If I hover over that, you can see that underlying this, it's actually an assembly item. It's in and of itself assembly bill of materials. But you can see that, so I'm going to show this compared to another one that's using this as Phantom, because one of the most confusing things for my clients is that understanding how a stock item is different from a Phantom. A Phantom item doesn't really exist. So if I look at this one here, the serialized bill of materials, this bill of materials, so these components are actually is referred to as the bill of materials. So this bill of materials is identical. I copied this item to this item here, and the only difference is I made this Phantom. But you can see that the bill of materials does not look any different. So I'm going to be talking about the difference between Phantom and stock. But right before that, I want to just allude to this over here, effective and obsolete date. So you can actually go in and modify your components and say, oh, I'm no longer using that headset, I'm using this headset, I'm no longer using this charger, I'm using this charger. And you can say, you don't want to actually delete it because you want to keep a record of what that bill of materials actually looked like at a point in time. And you can use this effective obsolete date, or you can use revision control, which I'm not going to go into today any more depth. However, I've created, and you can also do this because a lot of times over time you'll have a lot of parts to get replaced out. I created a custom sub list, and it'll always show just the current BOM or bill of materials. So back to Phantom and stock. So what would happen is that a Phantom item means that this headset, which consists of multiple parts, is not actually stocked, but it's a reusable number of components. So if I were to actually look at this here, at this assembly bill of materials, these are the components that make up that headset. So you can see there's three components here that make this up. And yet they both refer to just one part. So you'll see the difference when I do the assembly build of what happens. So a Phantom basically says it's not really there, and it's just that these components are always used in this other product. Maybe you use a series of 10 items that are used in all your products that you build. So you can either every time enter all those items in, or you can say you can create a Phantom item and then say every time just pull those in. It's kind of like when you create a poem and you have the stanza, the reframe, I'm not sure really what you call it, and it's in the poem maybe 8 times, and you would just, in Word, you would just, cut and paste that in. So basically that's what it allows you to do. That stanza might be something you sell in this case, or it might be something you don't, but you just want to be able to easily pull in those items without actually having to build that item beforehand. And what the value of it is, and I'll show you this when we actually build the assembly, is that you don't have to, if something changes in that headset, this assembly build, and something changes like it did here, I didn't have to go and change all the other products that use the headset and change each of those items individually, because it automatically rolled up because it happens at the time of assembly or the time of the work order. So if I go over now to transactions and I go to manufacturing and I say build assemblies, oh, the other thing I did want to show you in this, since it's a serialized item, is that you are going to have one other tab here called Inventory Detail, which will show you by serial number what's in stock. And you can modify that and also start doing things that, okay, which are the ones that have been, which are the ones that are been sold, etc. But that'll standard with all serialized inventory parts that you have in the system. So if I go to an assembly build and I do that one, which is the PSX GN kit, and I say I want to build quantity of 2, and it's at location, at this location, at our one facility that we build this at, you can see, oh, you only have 1 on hand of this. Well, that's fine, but you have no headsets. So then I change this and I say, okay, I just want to build 1 because I know I have 1 on hand. So at this point in time, I would actually choose which item which one I want to use that's in stock. I could select that from a list. And then I have to also, because these are serialized, I have to at this point in time say, what are the serial numbers? If I only have 1, you just type it in. But if I have, maybe I'm doing 50, I could cut and paste from a spreadsheet and put them in, or I could auto-generate that, and I'll show you that in just a few minutes, how you auto-generate. So, and I'm there like, I can't build anything. But if I change this to the phantom one, notice that although there are no headsets actually on hand, the parts that make that up. So you see how although the bill of materials on the item itself only showed that 1 item, when I actually went to do the assembly build, it expanded it automatically. So what is the value of doing an assembly build itself? Well, we hardly ever do assembly builds in and of itself. We usually go from work orders, which I'm going to be going into in just a couple minutes. But the real value of doing an assembly build is because it can tell you, we use average costing, and it can tell you based on the average cost what would the projected value be. So if you're looking at pricing and you want to go, oh, we've gotten a lot of parts in and out, what would, we have to tell our distributors or post our prices for this product that we sell. You can do that by just putting in a quantity of 1 on an assembly build, and it'll come up with the projected value. So, and that's true whether or not you have the PSX GN kit without the phantom. So that was 422.21. And here, this is just the kit without the phantom, so now it's no longer expanded. It still is the same price. That's because it uses average costing. So even though I have no headsets on hand, you can see that now if I just said 0, I don't know why that popped up, why that would change, but you can see even though I don't have any in hand, the value of that without the headset has decreased. I just put a 1. Doesn't matter that I don't have any on hand right now. It's still going to show the projected value because it takes it from the average cost in your record. So that's what I wanted to kind of show there. I'm just trying to think if there's anything else I wanted to talk about. Yes, the serialized assembly bill of materials somewhere here. It might be under inventory. It says costing method is specific. You know that that Cory talked about average, LIFO, FIFO a little bit. There's something called specific. And when you create a new assembly item, you can say whether it's going to use average costing or specific. It used to be in the past, whenever you created an assembly item, it would always use specific, serialized. This is serialized only. This only applies to serialized items. That it would say, you know, average cost or specific. Specific means that every time, if you set this to specific, every time I sell an item, based on that serial number and the cost of that item when it was built, then it's going to use that in the underlying general, you know, GL impact. If you have this set to average for a serialized assembly item, then it's going to just say basically, well, the average prices of this product is 1,000. So even though this one might have cost 1,200, I'm going to still just use the average costing. So you might always want to look at specific to get more exact, you know, to have a better idea of what you're actually getting as far as profit by serial number. All right, going back to my presentation. This is just information talking about the advanced bill of materials, which was introduced in 2018, versus the legacy BOM, which is what most of us use. Let's see, this just talks about, this talks about the phantom. And so basically, you can have a phantom. You can say every time I ever use the subassembly, I don't actually stock these. It's always going to be phantom in any item I use. So then in any product that I use airborne sense sleeve Rev B, this subassembly, it's going to always say it's a phantom item, never expect it to be stocked. Now, when you do work orders, in assembly bills, you can't change from stock to a phantom stock to creating other work orders, etc. But you can if you use work orders. So I rarely use assembly builds in our environment. I usually work orders, which turn into assembly builds, and work orders is what I'm going to be discussing next. This just goes into a little bit more explanation, and though you saw in my example effective date and obsolete date, you can see that you can use revision control. Instead, you can actually define a revision for those dates that, you know, is based on those dates. This talks about the costing methods that I just spoke about. Also, an important tip here, if you have assembly items that you're never going to sell, like resistors and capacitors or sub-assemblies, always make those items inventory account is empty. If you don't, if you put something in the inventory account, then they're going to show on the drop-down list when you enter in a sales order, if you enter them internally. You can't convert or copy from serialized to non-serialized items or vice versa. The advanced bill of materials sort of gets around this limitation. And then another caution, unbilled an assembly, you need to be very cautious because depending where you unbuild it, it's going to take the average cost of the values at that location, so you could end up with zero. So if you have a product that you decide to unbuild because it's been returned, and you unbuild it into a separate location because it's a used product, then you just need to, you know, proceed with caution. That's basically what I'm saying. This just shows sort of the difference between regular inventory assemblies and serial or lot number inventory, and what you can have as far as the components can be. So this is what a member can be in one versus the other. And just to also mention again, unless something's changed, kits cannot be serialized. Therefore, you need to use an assembly item that you want to sell, unless you create a custom field of your own to define the serial number, which obviously people do. The next 2 slides I'm not going to go into. It's just sort of using a bike example and stock versus phantom and what it does. So because one of the questions that often comes up is people have a sub-assembly, but they want to know what that sub-assembly costs, like that headset. If that headset behind the head is always a sub-assembly, when I go in to look at that behind the head headset, it's never going to have a price because it's always used as part of something else. So that's important to understand, that you need to go and look and actually do an assembly build for at least one item and pretend it's stocked to get that price, or just do the assembly build and see the projected price. So just more information, things that I've gone over, just so you have it in the actual physical slides when you go through this. I'm going to go into work orders now, if there's no burning questions, because I only have 15 minutes to go into work orders. So I don't see any questions that have popped up yet. I hope you're still with me. I know I'm moving really quickly, but like I said, this portion alone could have been 3 hours. So going into work orders are basically planned assembly builds, and they track the production of the assembly items needed for stock or to fill sales orders. So they're incredibly powerful. They look a lot like an assembly build, but there's a lot more you can do with it. So with a work order that will eventually turn into an assembly build, you can change the source. You can say something that you usually stock but not there, make it into a phantom, or something that's usually a phantom, but oh, well, we happen to build some of those sub-assemblies, you can make it into a stock. Additionally, with a work order, over here, you have this status of released versus planned, which is incredibly powerful. So a work order, let me just go back up to here and make sure I haven't missed anything. You have to turn on work orders under the enable features. And then under the manufacturing preferences, you have some other options to like default the work order status to released or to be planned. When you go back to this work order, you can add, so you create this work order. It can be generated automatically from a sales order, or you can create it because, you know, in our case, we build like 1,000 at a time, these underlying boards that go into our, those little blue cases that you saw on the very first slide. So we build 1,000 of them. So I would create just a standalone work order to say, I want to build 1,000. Well, why wouldn't I just use an assembly build? Well, because I'm not actually building it yet. The assembly build is transactional. It occurs at that point in time. It's going to take out the inventory. But I want to know, what do I need to order in order to do that? So if it's released, it'll actually modify the each item in the inventory, each item that you have in inventory, and say, oh, this is back ordered. And I'll say these are committed. Like, okay, well, we've got, you know, 100 of this part, but we don't have 1,000 of this part. They'll say 100 of them are committed, and now back ordered is 900. And then you can use that in conjunction with your reorder points, or if you're not using reorder points, you can create a saved search that basically says, okay, well, what do I need to order? And it's incredibly powerful. And this is what we use all the time. Additionally, we use work orders because the sales order comes in for a specific finished product, and then we go ahead and it'll automatically create the work order, and we're going to show you that in just a minute. So work orders, as I said, eventually become assembly builds. So they're non-transactional because, as Cory said, anything that ends with the word order is non-transactional, and you you check a box on each item to say it's a special work order item on each item, and then it'll automatically create that work order for you when the sales order is approved. So, oops, let me go back to this. it looks very similar to an assembly build, but it's a holding area. It allows you, as I said, to modify, add items, modify items, change them, change the source, etc. And a work order can auto-generate other work orders and purchase orders, like for parts that you need to order. You can, it allows for phased assembly builds. So for blanket purchase or blanket orders that you get, blanket sales orders, allows you to just build some at a time. And this, as I mentioned before, is to me the greatest value, is it allows you to do analysis for future orders to determine what you need to order. So we use work orders for everything, except we use assembly builds to determine the current cost of building out a product to assist in the pricing of that, or when we do repairs for the production of sub-assemblies used in those repairs. So at this point, I'm going to go back into the demo and show you some, actually walk you through so you can see how this works. So I am going to show you a different product. Oh. This is a VPE 2000 that we sell. And as you notice under inventory, I have special work order. If you can look at the help and you'll see that it'll automatically create the work order when the sales order is approved. So now I'm going to go ahead and close some of these other tabs. I'm going to enter in a sales order. I'm going to just, this is a test environment, so I'm just going to say this is radiolics. And I'm going to say this is pending fulfillment. And okay, so I'm going to put in VPE 2000 is the item we want to purchase. And I have required that we put in release dates for many other reasons. I'm going to say the release date is today. Quantity is 20. And see how this is checked, create work order. So I could uncheck that if I wanted to at this point in time, but I'm going to leave it checked. And I need to, since it's showing shipping calculate, I'm going to just change this to FedEx, and then it's just 0 since we charge shipping to this. This is one of our OEMs that has this product, or one of our who we OEM to. And then I'm going to go ahead and save this. So when I save this, notice that right away, what comes up is these pre-releases are a little bit slower, but you're going to see that it actually will generate the work order for us. So see the work order is 1263. So I'm going to go back to this and just say, okay, well, let's just, let's go ahead and fulfill this. I'm going to go ahead and, so I want to fulfill this sales order. I need to go back into the sales order. And I can't actually fulfill it yet because guess what? We haven't built this yet. So this is the work order. So the first thing I'd do is I'd open up the work order. So if there's a future point in time, I'd bring up the sales order I know should be fulfilled that day. I go into the work order, and then I would say, this is a work order. I could just say create build. But what if I knew that I actually needed to swap out a part? Maybe instead of, notice the work order, there's actually 35 parts here, and then some of them are phantom and some of them are stock. And it'll actually expand these phantom items out within your work order, and it shows you. But what if I know at this point in time, let's show all of these. that instead of, let's see, instead of this, I happen to know these are stocked at this point in time. There's really not going to be stocked, and it's going to show 0, but I'm going to just show stock. And so you can see then all of the all of that disappeared underneath it, where this here. So you can see that now the components that make it up aren't there. I'm going to change it back to Phantom, just so you can kind of see sort of this is like a magic trick. And then you can see it's now all expanded again. And what if I knew that I wanted to include a headset in this? So now I might say headset behind the headset here. And I would have to add in that I want 20 of these. So you can add, you can delete, you can change the source, you can make something that was stock, you can actually make it into a work order or a purchase order, a work order, etc. So much value and strength in all of this. So I'm going to go ahead and I'm going to refresh that. I'm not going to make any changes. That was just to show you what could be done. And I'm going to go ahead and build this. So I would bring up the work order. Just this is how we looked at it when it first came up, work order. I'm going to say create a build. And I'm going to go ahead and notice that this is serialized. So it's going to require me to put in a serial numbers. I'm going to auto generate these numbers. I'm going to say the minimum digits is 4, the starting number is 300. I'm going to say OK, and notice how it automatically populates them all for me. Okay. And I'm going to go ahead and save that. And what I want to show you is that once that is saved, the power in this is that I can go back to the sales order, and I can now say fulfill. And the inventory, the serial numbers are all pre-populated. I mean, isn't that really cool? You could never do that if I'd just done this independent and done an assembly build of VPE 2000s. So that's basically what I wanted to show there for the work orders. And I know I am out of time.
Yep, Margie, I'm going to post the CPE checkout keyword real quick.
Okay.
There are some folks that I think need to leave, so hang on just 1 second.
Okay, meanwhile, I only had a few other slides. There's so much you can do with work orders. You can have, as I already talked about, plan versus released. You can create work orders from 3 sources. You can mass create work orders. If you've got reorder point set and all of that set that Cory talked about earlier. I thought you were going to post it, Cory, in the chat
Oh, no,
window.
sorry. No. I can't post it in the chat window. It just has to be screen share.
Okay.
No. The checkout code is leaves. Sorry, Margie.
So
there are some folks who
can I go back to
we'll go back in just a second. I just need to make sure that we get this. The checkout keyword is leaves. All right, Margie, you can go ahead and reshare.
Okay, sorry, I didn't realize you couldn't post it in the window. There's just, if you use reorder point, you can mass create work orders, which is incredibly powerful. And then when you're building work orders, there's other screens that allow you to just check all the ones you want to build at once, so you don't have to do them individually. That was just showing you from a sales order. And that was basically it for work orders. The only bonus material I added, I just wanted to add in some useful pages in NetSuite if you're using work orders, if you're using assemblies, things like that. and useful reports and why they're useful. So that was kind of it. And obviously we do not have time for questions. As I said, we're trying to push a lot of information, Cory and I, into a very small amount of time, and I thank you very much. No, we don't cover routings in this. That's actually a separate module. But if you do have any questions on anything that I presented, that's a fairly quick question, you can either put it in the LinkedIn forum or my email address, put it here again.
Can I go ahead and post that keyword
much.
again real quick, Margie?
Sure.
Okay.
Yeah, so I thank you all again for staying with us, those that you have stayed around, and I apologize that we don't have time for open forums, but such is life. So maybe we just need to do like a whole day for people that are interested in manufacturing.
Or split the meeting into 2 separate meetings.
Yeah.
Because we could have easily done two meetings out of this. So, yep. Well, thank you, Margie. That was great. And thank you, everybody, for your time today. And thanks for joining our meeting. Happy fall to you. We hope to see you all at our next meeting in November. And again, the LinkedIn forum, we can use that for follow-up questions and answers. And hopefully this was valuable for everybody today. Thank you so much for coming. I'll leave this posted for just a moment. Okay, we're going to end the meeting. Thank you, everybody. Take care.